inspiring and educative. Even though we started out this session yesterday on a very rough note because of poor network, but soon after things straightened out and we began to have a better conversation with little or no friction. The subject matter of our discussion during this conference was carefully chosen because Nigeria and the most of Africa, they are standing at a very dangerous precipice at this time, which makes it imperative that we seek alternative instruments that can enable us effect the needed change. Often people think that the problem that Africa has is lack of funds or lack of help from Western countries. I told somebody who was interviewing me a couple of weeks ago that even if you give 50 billion US dollars to each African country for free, just give them a few months and each of those countries will be in a worse state than they were before, because those monies will just find their way direct into the pockets of individuals, politicians, bureaucrats, and all the people who have lined themselves at the corridors of power for the sole purpose of fleecing the public. So what we need is not another handover or another hand-in of probably some kind of aid here and aid there. No. What we need is alternative, decentralized finance that will give people the opportunity to pursue and own their individual wealth in a way that it will be far away from government interference, far away from manipulations from political class. I spent most of my youth enduring the hardship that poor governance and poor economic decisions has continuously plagued Nigeria and the rest of Africa. So we carefully chose this theme because blockchain has been unveiled to us a couple of years ago, and we have begun to see the impact and its power, not just for transformation of nations, but directly transforming individual lives and giving people the opportunity to seek alternative wealth and also have the power to retain that wealth. And that's why we have taken time to gather all the speakers and the panelists to grace this conference and do due diligence to the topic and the agenda of the conference. I believe strongly that today is going to be much, much more awesome than yesterday because we have lined up a couple of interesting speakers that will be tackling subject matters of interest. I believe that for every attendee of this conference, you are going to be that guy or that woman, that boy that will be the change agent to your own family and to your own lineage. Because we can see how dangerous the global economy is. And you cannot add that to our political ineptitude. So it is time for us to stand up and take the tools of blockchain and digital financial assets to craft a new future, a new financial future that will guarantee a sustained and totally resistant proof solution to our diverse economic challenges. So I welcome every one of you today again for this wonderful conference. And I tell you, we'll try to be on time. Yesterday was too fatigued. I was so fatigued because of the marathon nature of the conference that we had. Today will be a little bit flexible and allow some minutes of break so that we can stretch our legs and come back to our devices. So thank you once again and enjoy the conference today. Thank you. All right, so we are having our first session this morning, and we have here already the presenter Nelly Chatudio, and she's a Tezos Foundation representative for West Africa. And I will allow her to do her introduction because she has a very robust CV, almost like a book. Okay, but I'm sure she will take some time to do due diligence for our own introduction. So let's please welcome Nelly and Chachi Diop.
Thank
Nelly,
you. Okay, thank you. Thanks a lot. I'm really happy to be here. A really fantastic event organized by the awesome Blockchain Nigeria user group. So I heard and I saw that yesterday was already great. I hope that I will start the dance again, and also it's gonna be like the start of another great day with you guys. What can I say about me? So as of now, I returned to be permanently based in Africa a week ago because I spent the last 20 years between France, UK, and the United States. Currently, I'm the co-founder and CEO of Ijara, a mobile investment platform based on blockchain, which is targeting Francophone Africa to start with. Prior to that, I've spent the last 10 years in corporate executive roles, building and setting up data, revenue management, innovation departments across multinationals in Europe. I started my career 20 years ago as an engineer because I'm a computer science engineer. And I did also a short investment banking. I have a short investment banking experience at the city in London, which kind of helped me already see how the financial systems work from the inside. And I think that's when I started kind of questioning everything I knew about like monetary policy, about financial systems. And when I came across a blockchain in 2016, I became passionate. I kind of fell into the rabbit hole. I mean, African, I'm Cameroonian by birth. So I could quickly identify that this technology has by design a way to kind of help us solve a lot of our challenges and problems in Africa. And I like what Shume told when he started this session, that we should each of us be an agent of change. So it's because I deeply believe that I decided earlier this year to come back and stay in Africa and fully embrace this technology to address challenges on the ground. Today, I will focus my speech. Oh, and one mention also before I jump into my presentation. I'm also fortunate enough to lead the Tezos Foundation West Africa branch here. So our aim is really to educate people in West and Central Africa about blockchain, about Tezos, the smart contract platform, and how it can help solve local issues. We have chapters in many countries, and the Nigerian one is working with a great partnership with the Blockchain Nigeria user group. My subject today, it's about central bank digital currency and how we can use a blockchain and specifically Tezos to kind of already run maybe some experimentation in Africa, and why it would be like a great advantage to do so. So bear with me. It's not a long presentation. I'm gonna be in the session. After the session, I'm gonna be available to discuss and answer questions you might have. Okay, so I hope you guys are all seeing my screen. Can you let me know if you are seeing the screen? Okay,
Yes, we are seeing your screen perfectly. Go ahead.
perfect.
Yeah.
Okay, so the subject, central digital bank currency in Africa, how can Tezos help to make it happen? So we're gonna go through first some definitions around Tezos, what is a token, specifically a security token. Then we're gonna dive into a central digital bank currency, what is the central bank currency as of now, and what superpower does the word digital and blockchain could give to that, and what are the advantages, and then finally why now and why Tezos. So for those of you that are not familiar with Tezos, it's first of all an open source software, of course, but mainly it's a kind of a blockchain that supports secure smart contracts and has a number of key features that make it particularly well suited for high value digital assets. Namely the fact that it's really designed like securely with the smart contract language that is used for Tezos that is called Michelson, which facilitates what we call formal verification. So it's a methodology common use in mission critical environments such as the aerospace, the nuclear, and that ensure the correctness of code. You don't want to put your valuable assets on the blockchain if it runs the risk of being lost because of the bug in a smart contract. So Tezos smart contract language and the way its architecture is designed ensure that the code that you deploy to production is always correct. The second key feature, I think, which is really critical when you think about a central bank digital currency, is bear in mind that some central bank securities have multi-decade lifespans. So you want a platform, a blockchain protocol that has a formal upgrade mechanism and that allow the network to kind of propose and adopt new technological innovations, mostly as they emerge. So this kind of aspects combined with Tezos on-chain invoicing mechanism enable the protocol to remain state of the art long into the future. And lastly, Tezos consensus mechanism is based on what we call liquid proof of stake. So first, proof of stake versus proof of work, it means like more energy efficient. And also it allows all stakeholders to participate in network upgrades by evaluating, proposing, and approving amendments. Let's jump to token, security tokens. So basically, they are digital identity that represents ownership in an underlying real world asset. Um, so they allow for an easily and safely transfer in real time to new owners. So like a blockchain transaction, you might already, I think after yesterday, you are already familiar with how a transaction works in blockchain. So it also helps to kind of have these audits and reporting real time, which is great. And it also has solved this particularly difficult problem when you are working on a regular database, which is called atomic transaction, which basically means like when you are on a regular blockchain, you want to make sure that the first transaction initiated is completed before a second one can happen, so that you don't run into kind of bug. And the way a regular database resolve that is to be really strict, refuse to start any transaction until the previous one has committed. And with blockchain and with digital tokenization, it allows for concurrent and parallel transaction to happen in a really secure manner, and which is really, really, really important. And lastly, about like the specificity of having a kind of token is like you because you use a blockchain system, you use a decentralized database. So to do the tracking of who owns which assets, compared to now that you have to centralize like everything on a singular database for central banks. So which is that's why I put like this intermediation at core. Uh, so let's jump into like a central digital bank currency. So I put stablecoin because previously we saw that a token should be kind of linked to a real world asset. So in the case of central bank digital currency, if we are in Nigeria, for example, it should be linked to the amount of naira currently present in the economy. If we are in Francophone Africa, it should be pegged to the CFA franc. So it can obviously be used in the public or private blockchain, but I'm sure Shumi and I would prefer it to be on the public blockchain. Tezos is a public blockchain. It's backed one by one, obviously by local fiat that are deposited either in central banks or in the commercial banks that are that hold agreements and licenses with the central banks. The real time audits, it's really critical to kind of bear all the legal requirements and the compliance requirements that are necessary when you deal with money. And also, it should only be edited by licensed and regulated platform as it is as of now, because as of now, only the central banks can kind of produce money and in local jurisdiction. So tomorrow, if it were to be like a digital token, it should be either produced by central banks or by fully licensed and regulated financial institutions. So this is to just to say that not, because we use blockchain and maybe private public blockchain, it doesn't mean that we go too far from what is currently happening at the central bank's level. We're just giving it superpowers. You can have two types of central bank digital currency. One that are designed for wholesale, meaning like regular financial institutions like the bank, or one that are aimed to the general public, which is called retail digital currency. So in the case of wholesale central bank digital currency, so it's designed for financial institutions that all reserve deposit with the central bank, and it will be used to improve the payments and security settlement efficiency, also to reduce counterparty and liquidity risk. And what it will really solve, like as of now, is all the inefficiencies that we can see, especially when you think about kind of cross-border payments with those institutions that need like correspondent banks, like having everything auditable real time that can be transferred at once really makes the whole financial system faster, inexpensive, and safer. When it comes to Africa, so when you are from a European perspective, on the US perspective, usually what we can see is that central banks are thinking in terms of wholesale because they really want to implement that first step. When it comes to emerging markets like ours in Africa, I tend to think that retail central digital bank currency is the one that will be the more beneficial for a customer because by design it's going to promote more financial inclusion by accelerating the shift from kind of a formal way of thinking about finance to include like the informal sector that currently use still a lot of cash. And also bear in mind dealing with cash require like generate a lot of costs, capex and opex costs, cash printing, handling costs with all the risks associated. So it could also help our government that don't already have a lot of money to address our issues, population issues, we kind of save that. So advantages, I think we cited already a lot of them. So cost reduction, definitely financial inclusion. So like when you think about the rural Africa, it's composed of 70% of rural population. So whenever people talk about Africa and digital revolution and technology innovation, we tend to look at the big cities and even the fintech sector, all the innovation we tend to develop kind of meet their targets when they are in big cities and they have kind of access to data, internet, electricity. Whereas if you have a state level, a central digital bank currency, it means that by design, you are also including all those people that are always left over, not only by traditional banks, but also by the innovation that is currently ongoing. That's why I say give access to new markets, to new kind of people, to new kind of economy, like the informal one. Definitely having a digital currency will definitely spare and allow financial services to leapfrog in Europe thanks to in Africa thanks to the fintech sector. Because everything is auditable in real time, you can check, you can protect yourself, you can do on real time reporting. So it's the best protection against financial crime. And you're gonna improve like the existing wholesale financial systems, including like interbank payments, settlement systems, delivery versus payment systems, cross-border payments, settlement. So like a lot of financial operations that are currently plagued with a lot of inefficiency could hugely benefit. So to sum up, it increases the fluidity, efficiency, and effectiveness of entire deal flow. So why now? I think I started seeing a lot of experimentations around central digital bank currency late last year, especially when Facebook announced the introduction of Libra, its cryptocurrencies, because quickly all the central banks, all the major central banks around the world identified that as a threat to their local monetary policy, and especially the US having the US dollar as the reserve of the world, they could quickly identify how this introduction by a great technology company that has billions of people connecting every month on its platform could really threaten the superpower of the US dollar. And earlier this year, China also introduced like the digital renminbi, and that also has a lot of central banks, at least in Europe and in the US and even in Asia, starting to run their own experimentation because they don't want to leave China alone with this innovation that can help him to do like more efficient trade, especially when you consider the relationships today between China and Africa. So having an e-renminbi to ease these trades could really help China to be like the number one commercial partner of most countries around the world. So that's why we start seeing also all those talk about central digital bank currency, I think. Other reason, digitalization is already everywhere. Internet, like 20, 30 years ago, was already the first step in the digitalization of our lives, in democratizing information. So now let's embrace this kind of transfer of value thanks to blockchain and digital currencies. And I think COVID has also accelerated this trend because in a lot of countries we can already see people fearful of using cash paper because some research have shown that the average kind of European banknotes hosts around 26,000 colonies of bacteria. So people are really afraid and resort to payments by virtual cards, by Visa, MasterCard cards, or by any means that are kind of digital. So it's kind of an ongoing trend that will accelerate. And another thing that makes even the commercial banks lobbying for what a central digital bank currency still those are still stations that are being purchased and retail central digital us populate us as in keep and deposit the money to the how do we redefine the role if central banks that people can trade towards the deposit. So this also kind of paradigm shift has thought through so that the change.
maybe the, the network not treated. Are you there, Nelly? Are you there, Nelly? Hello? Hello, Nelly, are you there? Oh. Hello, Nelly, are you there? Then we'll just close this. I'll close. Hello, guys. Apologies once again for being unable to reconnect back to Nelly. I'm very sure that we'll hear more about her. She still has about two more panels that she'll be on. She'll be on the panel on the advantages of central bank digital currencies, and she will also be another panel on regulation and standardization of blockchain and crypto assets. So we'll have more opportunity to hear all that she has in stock for her. But right now, we're moving forward with another presentation by an awesome guy, a blockchain engineer, Charles Okorofomba. We've been together on this journey since 2016. And if there's anyone in the industry that I can tell you that has a story to tell that is similar to the one that we are telling here, it's Charles. So, Charles, we welcome you to go ahead with your presentation. You're presenting on token-based business models, the science of tokenomics. Charles, you are on.
All right. Good afternoon, everybody. You're welcome. Welcome once again to BlockDeFi. My name is Charles. I'm trying to see how my screen should be coming up now. Okay. So I'll give a little presentation about myself. I don't know. Can anybody see my screen?
Yes, we can see your screen. Go ahead. Go ahead.
All right. Okay. Thank you. Thank you very much. So, thank you, Chimeze, for the introduction. Like you said, my name is Charles Okafumba. I'll be making this presentation today regarding token-based and business model, the science of tokenomics. So, a little bit about me. I've been in the space for quite a while now. Though before that, I've been doing some tech business. Currently, I'm the blockchain solution architect for Sterling Bank. And I have some other businesses that are also blockchain based, Vessel Trust, Conversity, and then also a team member to Kitty Fight, which is a DeFi gaming platform. So I would say for a very long time now, I've been playing around the blockchain space in terms of solutions and cryptocurrencies with tokens. So I believe this presentation will be worthwhile, though it's going to be brief, but it is going to worth your while. So let's get started. What is tokenomics? Now, economics. A token economy is a system of contingency management based on the systematic reinforcement of target target behavior, which is based on the principles of behavioral economics. This is more of like a grammar, and it's more of like a jargon, or some people might not really get what this is all about. But what I want you to get from this is that before the whole blockchain came, before the whole token system came about, before the whole noise and the whole the information you'll be getting about tokens or creating tokens and all that, token actually existed before then. Take for example, you going to a party, you pay for a ticket. Now that ticket that is given to you in exchange of that money, that's a token. Even before the gold standard, when paper money, when paper was representing gold in terms of IOU, that's also tokenization too. So we already have token existing before now, and also token system is a way of making people or users conform to a particular behavior. Take for example, like in a school, where you say, okay, if people behave in a certain way, if they get good grades, or if they come top of the class, or if they attend classes, or if patients in the psychiatric hospital are able to behave in a certain manner or take their drugs, they will get rewarded with a certain token, maybe by food, or maybe by let's say a kid that comes first in class, and the parents rewards him or her with a bicycle also. So the token system is a way of making sure that people conform to a particular a set rule, which is more of like a game theory when it comes to the blockchain system. Now, bringing it down to the blockchain system, for tokens that we already have in existence, like the first token, which is Bitcoin itself, it was made in such a way, aside it being a peer-to-peer electronic money transfer system, the Bitcoin itself was meant to make the miners conform to the consensus principle, or to the consensus theory of the blockchain system itself. So if you behave well, if you behave good, you will be rewarded for it. So that is the idea behind token, for people to behave in a certain way, and then they get rewarded for it. Now, for tokens itself on the blockchain, we're bringing it down to the blockchain now. Now, when applied to game theory in a blockchain network, such token reward serves as payment for good behaviors. So, people that are mining, people that are ensuring that the network is safe, people that are connecting to the network and all that, you are being rewarded by this token itself. So for that, the token itself is a value, but the value is based on an asset. It's based on something. It's based on it has an underlying asset that is giving it value. Now, for the blockchain itself, there are different kinds of. We have two majorly actually. We have the mined and the pre-mined tokens. Now, for the Bitcoin and Ether, you already have tokens that are coming out that are being rewarded to miners, and then from there it enters the circulating supply of the system. So this token, we know them as native tokens too. Then we have the pre-mined tokens, which people are creating, like you create a token in the Ethereum network itself, or you create tokens in Tron or any other smart contract blockchain. So these tokens are the pre-mined one. They are created at the point of deployment of that smart contract on the blockchain. And also bear in mind that there are some tokens that are mined but created, but they are they are not pre-mined, but the smart contract that is launched into the blockchain system is going to create those tokens. Now, it is based on whichever rules that was set for such tokens to be created. Now, coming down a little more, we have what we call the fungible tokens, and then the non-fungible tokens itself. Generally, cryptographic tokens can be classified as fungible tokens. An example of that is like a Bitcoin, which it's exchangeable for something that is worth that amount of Bitcoin. Then we have the non-fungible one, which is represents a unique asset. Now, let me give an example of that. I'm sure most of you have heard of CryptoKitties. That's like a non-fungible asset because it is not easily exchangeable. Now, I'm bringing it down to our own world, our own physical day-to-day activity. Excuse me. An example of a non-fungible token is going to be like your credit, the airtime you buy from vendors and all that. Now you buying that credit or that airtime, you can load it on your phone, and then somebody can even collect it from you. But not everybody in the market will want to accept such airtime as a payment for maybe you want to buy rice or you want to buy vegetables in the market. Not everybody is going to accept it. So in a way, it is an asset, but it's non-fungible. You cannot easily exchange it for something else. An example also can be your car, can be your house and all that. They are not easily exchangeable to something of another value. Now, but I've already stated this. And then breaking it down a little, for the tokens we have seen in the industry, or tokens that are generally being created, let's say you want to now move into token creation for your business, or you want to tokenize an asset for your business. Now you need to consider the kind or what that token is going to represent. Now, is that token going to be a work or utility token? That is a token that will be used inside the network or inside as a payment inside that stuff your system, inside your system. Let's say, for example, you want people to a great example of a utility token is Ether or ETH, which is used in Ethereum. Now, people pay ETH in order for them to be able to create, in order for them to be able to create transactions on the blockchain, in order for them to be able to send transactions to the blockchain and all that. So in a way, that is a utility token. But because of the utility of it, it has value, and that is why people are actually speculating on it and all that. Now we have the security tokens itself. Now these security tokens, they are meant to represent a stake in a project. Now it could be, let's say, for example, for those of us that have actually bought into stocks, or those that are very knowledgeable about stock. Now, if you're buying into a company, or if you're investing into a company, and then you have some amount of shares from that company, now that is a security. So a security token represents that. So if you are going to create a security token, know that you are actually giving part ownership of your company or your establishment or your platform, whatever, to the holders of such token. And this is where there has been issues between the government and the creators of tokens, not it being security tokens, it not being security tokens, and how it is and all that. So you need to be very careful in this space. And I know some companies are actually thinking of having their stock or their shares, tokenizing their shares on the blockchain, so that users or buyers can easily buy and make it transferable. And one of the tenets of the blockchain is eliminating or removing or reducing middlemen. So this is one good use of a token system. And finally, we have the asset-backed token. Now, these asset-backed tokens are tokens that are being backed by assets. It's a physical asset. You have a lot of them already in the space. We have, I think there is one, I can't remember the name again. It's being backed by gold. It's being backed by gold. There's another one that is, we have the stable coins already. Those are actually assets that are being backed to by tokens and all that. So these are some of the tokens. And then we have land too. We have real estate, actually, tokens that are tokens that are being backed by real estate also. So you can actually tokenize real estate. You can tokenize your company shares. You can also create a utility token for whatever platform you are going to create. Now, for token modeling, now how do you go about modeling tokens? Because it's very wide. Now, for some of the businesses that I've actually spoken to, they create tokens and that token doesn't really fit the use case of their project. Now, for you to be able to measure, or for you to be able to create a kind of token that really fits your use case, let's take, for example, now, a token that is meant to serve as a contract. A token that is meant to serve as a contract for a landed property. Take, for example. Now, you know that contract, if we are going to go a little bit legal, it's meant to have some details of the landed property, of maybe the information of the owner, and some other basic details or registration info and all that. Now, for such type of a use case, you don't create what we call a number. You don't create like a token system that will have like total supply, or like the regular tokens that are just meant for sales, like you're doing ICOs and then people come and then they buy and then you just give them those tokens. No, some type of a contract or some type of a token system will need to be modeled to fit such kind of a use case. So you need to ask yourself, you're going to create a token, the token type, are they fungible or non-fungible? And then we have the hybrid. Now, the token unit itself, are they fractional or whole? Now, when we say fractional, then are they divisible? Is it going to be divisible, just like we have Bitcoin and Ethereum, that one Ether, you can still break them down, can still divide them or break it down? Or are they going to be whole? Now, that whole will be like a contract or a token that represents a landed property, or that represents a shares, that represents a company shares or a company stock, or just is it breakable, is it fractional, or is it whole? Another example of a whole would be a token that is for a school certificate. Now, the value type, is it intrinsic or is it reference indicative? That is that token like a value on its own? For let's say a Bitcoin would be an example of that. Ether would be an example of that. Dash would be an example of that. Or is that token representing, is it a reference to another asset? That is, you just create it, but it is representing an asset on its own. Okay, then representational type, is it common or unique? Supply, is it fixed? Is your supply fixed? Is your supply capped, or is it gated or infinite? So these are some of the decisions you need to really look at while creating a token for your system. Now, you also need to consider this, the blockchain type. Now, which kind of a blockchain do you want to put your project on, or which kind of a blockchain is going to run such a business? You must have heard of what we have currently in the Ethereum and blockchain, which I actually have a personal bias for, where somebody wants to send 4,000 naira and you are spending like $100 to send such a transaction. So it is, well, as a business, you need to really consider this. Now, will my business flourish on a public blockchain or on a private blockchain, or will a hybrid work for this kind of a business? Now, token classification, I think I've talked about this before. You have the utility, security, or asset-backed token. Now, you need to also consider the token exchange platform itself. Now, if I'm creating this token, how will the users be able to get this token? Now, am I going to create an internal exchange where people will come to the platform and they'll be able to buy and sell that token? Or do I want to make it in such a way that any exchange that we have, like Binance, like Bittrex, like forgetting this other guy, that they can be listed on Qubitex and all that they can be listed on such an exchange so that people will easily buy and sell. Now, you also need to note here also that if you are going to create a token and you want to control you want to control the price of such a token itself, then you might want to limit it to primary exchange, which is like your own platform exchange. Because if you make it open to a secondary market, then people can easily speculate on it or flood it with speculation, and then you might not be able to control the price of such a token. Might actually. Now, for liquidity, you need to also consider the market capitalization and the trading activities too. Now, if somebody buys 100 million naira worth of your token, and then they want to sell it back, will they be able to easily liquidate or sell back such a token? You need to consider liquidation and how to really go about it. And that this is where you must have heard of Uniswap. This was where Uniswap came up. This was where all these sushi swaps and every other swap we're having in the market are coming up to help take care of liquidity problem that has been affecting most especially decentralized exchanges. Now, also you need to consider the token adoption barrier. Now, for people to get your token, is it easily bought via fiat? And let's be honest, currently, if we're talking about adoption, we need to consider those that are not too knowledgeable about the space itself. And then they want one thing that will be easier for them. They are already accustomed to buying something with their card or paying something with their card online and all that, and then they get the value. So now for such a system, if you are going to create such a system, now will people have to buy Bitcoin and then before they'll be able to get your token? Would they need to buy Ethereum before they'll be able to use the Ethereum to buy your token and all that? So you need to consider that in order not to create a stringent barrier for those that want to get such a token. Now also you need to consider regulation too. I'm sure SEC is also, they are working towards that, and some agencies here also are working towards that. So you need to consider, is it a security token? Is it under commodity token? Is it under a commodity? And then, is it going to be like trying to rub shoulder with fiat currency? And if you are going to create such a currency, or if you are going to create such a token, you need to consider the regulation behind it, and when it comes up, how you are going to beat it. Then the smart contract audit, whichever contract is being used to create your token, you need to make sure that it is audited so that you don't have bug happening and then somebody breaking into your contract itself or breaking into your system. Now, finally, the asset audit and verification. Now, for tokens that are not intrinsic in value, that is, they have assets backing it. Now, in order for you to gain people's your users' trust, or whoever will be investing in it, they need to be able to audit to know that, yes, if you are printing out 100 million tokens, the value, the asset that is backing such a token really exists, and then they are worth that. Now, let's take, for example, a perfect example would be stable coins that as people are depositing or as people are buying it, those tokens that are being created has a fiat value that is backing it. Or even though if it is not a fiat value, let's say, for example, DAI, you have the Ethereum or the Ether that is backing such token itself. I will need to be fast. All right. So for case study number 1, I talked about Conversity earlier. Now I'm going to explain full disclosure. I'm a co-founder to Conversity. So now what we do with Conversity is this: we created it's actually an aid distribution system for vulnerable people in our community. So what we do here is once aids are coming into the platform and they are coming in via stablecoin, the token we are creating on the platform is just for record purpose. Now I'm trying to teach you there are different ways of using tokens. Now this token we are using is not like, it's not going to be a payment. It's not a payment system, or it is not an asset on its own, but rather it's going to just be a record. It's going to be for a record purpose, which will be passed from the from the donor to the recipient, then to the vendors, and then it just goes around the ecosystem of our platform itself. So it's not compulsory that you are creating a token that will be listed on an exchange or that will be speculated upon in a market and all that. No, you can create a token and just use it as a means of keeping tabs. And remember that why we are actually creating tokens on the blockchain is because it is not one of the problems the blockchain solves is that it helps for digital assets to be unique or not to be duplicated. And then you have the record, which is immutable and all that. So you need to consider if your project meets this standard or meets this criteria before creating such. Now, another on my list is actually case study 2, which is South Africa. And I'm sure some of us have heard about South Africa. Now, what they are doing, they are in the real estate sector, and they are mapping real estate to ownership to token itself. So, as a token holder, okay, you have you have a real estate somewhere which you can easily transfer to somebody else, or you can use as a collateral system with a bank or with any other agency that is attached to them. So you see, in this case now, we have token system, a token that is attached to a value outside the system. And in this here, the value is real estate that is within a specific geographical area. The third is actually an agro-commodity tokenized marketplace and credit financing, and I think this is actually been done by Sterling Bank. So in this case, farmers can easily tokenize their commodity. Now, as they are tokenizing their commodity, let's say, for example, maize or millet and all that. Now, as they are tokenizing it on the platform after storage, after it has been stored, they can easily trade such tokenized commodity. So they can trade it, they can use it for loan, they can trade with that tokenized commodity, and then buyers can also even buy from there. So now, the token system being used here is quite different in the sense that that token is a contract, and that contract bears information about the owner of such a commodity. So if it is moving from one person to another, the ownership, the information there inside that contract changes. So that means ownership of that contract has moved from one person to another. So that's another use case of a token system. Now we have for Belfrix too. Belfrix is actually they are an exchange, but okay, they have an exchange, but still they also have a decentralized identity platform. So we can also use token system for a decentralized identity application itself. I want to go to data. My time is almost up. Then Kitty Fight. Yes, I'm also involved in Kitty Fight. Now Kitty Fight I started out as the normal token system we have in the space, which, for example, create token, we get people to buy the token, and then they use that token as a way of payment on the platform itself. Now, that is a utility token. So let me just explain what Kitty Fight is. Now, Kitty Fight is the DeFi system. So users come to the platform, they bring their cards, which is CryptoKitty cards, and then supporters come to the platform too, and then they start betting on which card is going to win a fight. It's actually an limited fight and all that. But right now, what the platform is now is a DeFi platform whereby users come to the platform, they get the kitty. Now they put their KYT tokens on the platform itself. Now, after putting the KYT tokens on the platform itself, that serves as a way of luring fighters and supporters onto the platform. And after each game, the winning side goes home with the tokens of the losing side, and then those that actually brought out supported the game itself, that is, they brought out the first bounty for the game to be played, will also take a share in it. this whole system is actually a DeFi platform system, which it's quite deeper than that. I'll need to take more time to explain what a DeFi is, but I'm sure other speakers have already dealt with a DeFi. So what I'm just trying to explain here is how token system works. So you can create a token system for just utility purposes. And that utility purpose could be for the users that are putting in money on the platform to be able to get a certain percent out of such a platform after a certain period of time, or after activities must have taken place. Now, finally, we have case study 6, which has to do with Theta, DAI, and other stable coins, which I know some people must have also talked on at the other panel sessions and discussions too. So for stable coins, you already know that they are having assets that are backing them offline. So for you, if you have except that of DAI and other cryptocurrency assets that are backing stable coins like DAI itself. So we have other use cases. We've seen lending. Ela Credit is one of them. I'm sure they came out with an announcement 2 or 3 months ago. We've seen medical too. I think that's Nimedics, can't really remember. Then we've seen agriculture. So there are lots of use cases actually, but you need to really sit down and look at how your token fits and take care of some other some it might be unforeseen, but as you go along, you can always tweak and shape how your platform or how your system is going to run and going to fit its purpose. Now, who can tokenize? Anybody can tokenize, actually. You can tokenize your business, provided that it has the assets you are tokenizing, or whatever use case you are tokenizing has a community of users. That's number one. And number two, you don't flood the market with your token supply itself, that it's going to weaken the value of that token for the holders itself. That is actually going to spell negative for your project itself. So you need to consider that. So you can tokenize anything. You can tokenize anything that has a value. And then before tokenizing, you also need to consider who are the users of this token, or who are the people I'm targeting. The population also, you need to also consider that. And then how you want to make use of that token, you also need to consider that. So nobody's stopping you from tokenizing your platform, or nobody's stopping you from tokenizing your system, but you need to really be sure that what you are tokenizing has value and then has a market. So, and also, do not think, because I've seen people saying, okay, I want to put my business in the blockchain, I want to tokenize my system in the blockchain. Do not think that by putting it in the blockchain or by tokenizing it, it automatically means that your business is going to succeed, or your business is going to be the next Apple or things like that. This is a business. Your business plan also needs to be in place. So don't think that the blockchain is like the holy grail. It's going to make your business wow. No. Think of your business plan, think of your business model properly, and then you can now start think of properly about the tokenization process itself. So finally, in conclusion, there is still no stone-crafted hard rule to follow for businesses to survive, but one has to remain constant in being able to flow with the dynamics of the ecosystem, especially when it comes to crafting out the right kind of token strategy to limit or control the total supply and total circulation with a strong demand and community use case. So I think that is all for me. I don't know if I was too fast or if I really with this.
Thank you so much. Thank you so much, Charles. You more than did justice to this topic. I knew you will. Thank you so much. But before you leave, before we go backstage, there's a question that is posted here, and I think you should just answer this one. It says, are utility tokens supposed to be tradable and regarded as money? Example, exchange utility tokens. Are utility tokens used beyond the primary platform where it has its primary integral functions? How would you advise creators in the crypto space to apply UT?
Utility token. All right.
Yeah.
Okay. Thank you, Shadrach, for those lovely questions. Now, utility token is supposed to be tradable and regarded as money. Well, no, they are meant to be utility in its own use case, but we found out that people you can't stop people from
Speculating.
what they want to use as money to be money. What we presently have as fiat is because we take it to be money, we take it to be a value, and that is why it is value for us. That is why we accept it as exchangeable for other values. So utility tokens normally are not meant to be regarded as money, but you see people using it in such a way that they want to use. So you can't really stop them from doing that, provided that it still serves its purpose on the platform itself. Are utility tokens beyond the primary platform where it has primary integral used beyond? Well, not exactly, not exactly. For the ones we have seen, let me use
Ethereum.
Kitty Fight for example, or Ethereum. Yeah, Ethereum is the perfect example of it too. People, it is still being used on the platform itself. It is still being narrowed down to you use it to pay gas and all that. But we have people speculating and shooting the price up, which I am not comfortable with that. I believe in organic growth of tokens itself. So if we say if a token is going up from 100 to 200 to 300, the first question that comes to my mind is why is it going up? Is it really serving its purpose as utility? Now, if it is not serving its purpose as utility, then that means somebody is actually pumping it, and as they are pumping it, definitely it is going to come down also. So if a token is serving its use case and its utility, then the value would naturally flow into that token itself. Now, how would you advise creator in crypto to apply UT? You depending on what your platform is going to be about or what you really want that platform to serve its purpose. But the first questions you need to ask yourself is what kind of a utility token am I creating? Is it a security? Okay. I don't know if you really meant utility token or if you meant token in general to apply UT tokens.
I
Okay.
think it's utility is mentioning. That's why I concluded with UT.
Okay. So, well, I can't really, like I said in my last slide, there's no hard rules to it, or there's no stone crafted rules to it. But if you are going to create a utility token, you need to be careful about if you are going to put it in the secondary market, so that you don't end up creating a token that is meant to serve as utility. Let's say, for example, the token is meant to be used to pay for gas, just like we're experiencing in Ethereum now. And then you now have speculators driving up the price of that utility token. Now, for ordinary people that want to use your token itself, they get frustrated because the price is beyond what they anticipated the token to be in order for them to use it to do what it is meant to do. So you need to consider that. And then also, you need to also consider how you want that token to be used, in the sense that pricing itself, is the pricing going to be based on that token itself, or it is going to be based on the fiat value of that token? Now, let me explain that. Now, if you say, okay, for people to do something on your platform, you need to pay one BUNG, you need to pay one tutor, and then one tutor when your project started was just $1. But when people started buying, speculating on your token now goes up to one tutor now equals to $100. Now you will have people frustrated.
$1,000.
Okay, $1,000. So you will have people be frustrated trying to make use of your token, because now it is higher. It is beyond their purchasing power. So if you flip it the other way around, now you can say, okay, you want your token to be reversed. That is, it might be just $1 to get you a portion of that token itself. So you know that whatever activity they want to do on the platform is constant, $1. So even though your token is going up to like $100,000 for one, all that, the fraction that equals $1 still remains, and then it is still useful to the users of your itself.
Okay, thank you so much. You've done more than you are even required to do, Charles. I know that people will want to contact you. Please feel free to drop your contact. Of course, your information is already available. Anyone can chat you up and then network with you. Thank you so much. Thank you so much. So we are ending this session right now.
All right. Thank you too. Thank you for your time.
Yeah. Okay, ladies and gentlemen, thanks for still hanging out on this conference. We have our next presenter, Toyosi Ablorin, a wonderful young guy who has taken up a career in product management and doing a very good job out of that. He has been very active in the blockchain space, and I'm always excited to have him around when we are doing anything that is important. Toyosi, please, you are free to introduce yourself adequately. It's your time now.
All right. Thank you so much. And thank you, Chuta, for everything you've been doing in the space around growing the community and bringing more people to the space. So like he said, I'm someone that like tell people I'm obsessed with product. This time, tech product. And all because what our products are built to solve a particular problem. And so I love the fact that products, the blockchain technology itself is here to solve a very, very fundamental problem, and that would push humanity forward. So a little bit of intro about myself. My name is Toyosi Abolarin. Been in the space since 2016, consulted for a couple of companies, most especially companies who are probably not in Nigeria, but looking to expand to Nigeria or Africa. I work with Kudi, Exchange Ferrum Network, SureRemit, NairaX, Busha, and a couple of other crypto and tech startup. My background is in fintech and payment. Started the first part of fintech that I was in was remittance. So I used to lead the remittance sector of Venture Garden Group. For those that know Sendwave, we are the ones that help them expand to Nigeria, or we handle their operations to Nigeria for Sendwave. So after I from Venture Garden Group, I joined Curious. So Curious, we are a pioneer. We are one of the guys that started USSD for payments, for airtime, mobile top-ups, etc. And we do for most of the banks in Nigeria. So currently, I'm still with Curious, but a passionate part of my life is currently cryptocurrencies, and I'm currently working with the Crypto Fully guys. So basically, what is Crypto Fully? So just like the name is, cryptocurrencies fully. So it's our aim, or our vision is to provide the entire everything that cryptocurrencies can actually do, whatever problem it can solve for people, from lending to savings to payments to conversions and stuff. So unlike every other product, like every product, we are choosing to start one step at a time. And what do I mean by one step at a time? We launched a minimum viable product. And our minimum viable product is to start off by solving a very fundamental part in Nigeria, which is remittance. And why are we solving for remittance first? It's because one, we understand the remittance sector is big. 2019, over $25 billion was sent into Nigeria, majorly by Nigerians in diaspora. And we believe that one of the biggest use case or best use case today for cryptocurrencies, one of again, is remittance. The fact that cryptocurrencies can be used as a global settlement is very, very key. So we launched, so the aim for Crypto Fully for us is to see how we can provide provide enough, what's it called, enough services to the ecosystem. So in the long run, right, currently in development, we have our mobile app where you can lend by providing by giving us some of your giving us an asset, your crypto asset. Give us, for example, you give us 1 Bitcoin and we'll tell you how much you can give back with a very, very low interest rate. Because in Nigeria, in a country like Nigeria, you see people paying as high as 30, 40, 50% per annum on when you borrow. But imagine that you can give me 1 Bitcoin. When you give me 1 Bitcoin as a collateral, what I'll be giving to you back is probably equivalent of your 1 Bitcoin. And by the time you are paying back your interest rate, you are paying back maybe in a year, you're paying less than 3 or 2%, something very, very small. Yeah, so that's on the lending part. You can also be a borrower. You can decide that, okay, I want to earn interest rates. People are buying Bitcoin today and just holding it. So rather than just buy and hold, you can actually also give it out and say, you guys take and earn fees on it, and you're going to earn better than what the traditional bank are giving today. So as part of my presentation, what I really wanted to do today is do a short demo of our first use case. And again, what's our first use case? We built a web app that you can easily send money to anyone using cryptocurrencies. So we're just using Bitcoin. So that's one. Second is that this is a very, very simple and easy to use platform to convert your Bitcoin to Naira. So again, I'm going to repeat so it rings a bell. First use case is we want people to actually be able to send money from Nigeria, from whatever country, to starting from Nigeria, because this is a Pan-African solution. So starting from so you can send. And what are our biggest value proposition? I can do a quick run through. Go to TransferWise or what remit today. The exchange rates that they are going to be listing out for you is what. So let's say convert United States dollars. So you want to send 100. So the exchange rate here is 377, and the fees is 10. You are paying $10 for sending $1,000 to Nigeria. If I do another competitive analysis or comparative analysis of let's say World Remit, you'll be paying, or Azimo. These are some of the biggest. What's it called in the world? Some of the biggest money transfer companies in the world. So I say I want to send money from United States to Nigeria. You will see that the exchange rate is still going to be something very, very expensive. So let's just use transfers as our what we are. So if someone is sending $1,000, you will be getting 377,000 Naira. If I do that on Crypto Fully today, if I send $1,000, I'm going to be getting as high as 440 something thousand Naira. 440 something thousand naira. So the difference is quite is as high as a 30% 30% increase. So yeah, so your brother, your siblings, or whoever that wants to send money to Nigeria, or they can easily, rather than converting that dollars using these platforms, they can convert that $1,000 they have to Bitcoin and send using crypto fully. Same thing applies to those who have Bitcoin and just want to easily convert to Naira. They can do that on crypto fully without having to go about doing registrations and having to do a lot of KYC. So what I'll do today, just to be sure that people are following me, for the next 5 people that type in their account number, I'm going to be sending them $10 each. So if you are interested, just type in your account number and I'm going to show you how crypto fully works. Okay, so I have Adebayo Adelekom, so Zenith Bank. So I'm going to type here. So I go to crypto fully just to show you how it works. I enter recipient's number. You might want to type in your phone number too. Yeah, type in your phone number too. Adebayo Adelekom. Please type in your phone number. But why I'm doing that? So Zenith Bank, Zenith Bank, and I type in the account number. Okay, sorry, I don't need your phone number actually. Sorry, it's account number. So let me copy it again. I'm copying. Can you see my screen? Let me be sure you see my screen. Please confirm that you can see my screen.
Screen is not showing yet. Okay, it's loading. It's loading.
Okay. Sorry, I thought I've been sharing my screen since. Sorry. So Adebayo Adelekom. So I copied the account number. So this is this website, cryptofully.com, just to show you how easy it is to use. So the first place I come is I type in the account number. Sorry, I still didn't copy it. Copy, here, paste. Okay, Zenith Bank. It does an automatic account lookup. You see, yeah, it automatically validates the name Adebayo Daniel Adelekan. Send us email address. That's my email address, and I put in an amount that I want to send in naira. So I'll give you 5,000 naira. That's $10.35. So send now. So once I click on send now, all I need to do is log into my blockchain wallet and send the blockchain equivalent there. Just give me a second. I'm sending. And Adebayo Daniel Adelekan should receive 5,000 naira in his bank account very soon. After that, I'm going to do another demo with Victor Livingstone. So let me quickly do that right away. So I scan the QR code here, send Bitcoin, and I enter the Bitcoin value 0.00107273. Let me set the fee to priority so the user can get it immediately. So I have sent it. Once I have sent, the next thing is to go to my email. I should be getting an email from Crypto Fully that I have sent in sent some money. So Adebayo, please confirm to us when you get it. But the email should come in soon. So while waiting for that, I'm going to try to send to Victor too. Victor Livingstone Access Bank. Okay, Victor Livingstone Access Bank. But I hope you guys can see how easy it is. So I've sent it, and that's all. Remember, this is also an MVP for us. This is we literally just launched this some days ago. So Access Bank, I selected Access Bank. Account name should automatically validate Victor L. Emeka. So I didn't have to type that in. My email address again, so I can get receipt of my transaction. How much? 5,000 naira. I click on send now. Again, it give me another address to send to. So I enter the address and I type in the what's it called? The Bitcoin equivalent 277273. I set my fee to priority so you can get it. Again, the first person I sent to, please confirm when you get it. So second person is sent to Livingstone. Second person is Wema Bank. Let me try Wema Adedeji Owo Nibi. Yeah. So I got an email from Crypto Fully now. Yeah, transactions details. So this is the receipt. Send and receive. Hello there, we have received your BTC transfer. Here is your transaction reference. I can view my transaction details. And simple transaction is process confirmation. Adebayo Daniel receives Adebayo Daniel Adilekan. Please confirm once you get it. I just want to let people know that this works. We will also appreciate your feedback. Our aim here is that within 2 minutes, anyone can send money to any bank account in Nigeria without having to do a lot of KYC and the rest. This is still in its early stages, so give us your feedback. To Wema Bank. Paste the account number, select Wema Bank. Come here. The name should come out shortly. Adedeji Emmanuel Wonibi. Yep. My email address again. Put in 5,000 naira. So this is the third one. So we had promised send amount is not within limit. It's not within limit. I don't understand. Okay, let me. Right. So send now. Okay. Yeah. I don't know why that showed before, but I want someone to please confirm to me in the group that they on what's it called, that they got the money. 7295. Set my fee to priority. Continue send. Should have a second email. So let me see. Okay, 2 minutes ago. Okay, so this was the first one. This one was for so but within 2 minutes, all should go. I go back home. So let me go back again. Third person, Echo Bank. No, I already sent to Ade Bayo. Okay, no, I haven't. Still waiting for my bank. To Naira. Just go to cryptofully.com, put in your account number and send that Bitcoin there without having to register or go through any long process. So I'm sending again. Before I leave here, someone has to confirm to me they've gotten the money. 0.00107417. So all we actually need to send your money to you is a confirmation on the blockchain, at least one confirmation. So I sent one again now. Okay, transactions details. So this is the third one. So you have receipt of the transaction in case you have any issue. Our support staffs are here and they will reply to you within a few minutes. Adedeji Emmanuel Owonibi Wema Bank Naira received 4991.87 because I sent lesser because of the fees that were charged. Okay, not yet. So one more person. No, no. Okay, so Zenith Bank tutor, Akere tutor. Yeah. As anyone is a different person, please. Okay, yes. Still waiting for my bank alert. Yeah, you will get the bank alert shortly. So this is the last one, right? I think this is really the last one. So Zenith Bank. I'm not going to send to the same bank I've sent to before, accurately, but yeah. So again, 5,000. Yeah. Send now, and I'm going to send scan the wallet. You can either scan or just do a copy and paste. You can copy or just copy this and send it to whoever you need to send it to. BTC 0.00107506. Yep. What I can also do is uh, let me confirm this on the blockchain.info. Let me put this here. What I'm trying to do is to see if the transaction is also on the blockchain. I think I should have sent 5 now. Okay, so it's still unconfirmed. So once we get one confirmation, it should go through transaction detail. Transaction is processing. So yeah, I'm waiting for bank alert. So everyone is waiting for the bank alert. So I'll still. I think let me check. Please confirm how many have I done? uh, let me see. Let me check my email. I should see.
Well,
1, 2, 3, 4. Okay, I think there's one. Okay, 5. It's 5 already. So this is the fifth one. So I've done 5. As at least one person gotten alert yet. Uh, oh yeah, that's basically how crypto fully works for now. Remember, our long-term game is building a full functional system that is fully decentralized, and anyone can be a lender, anyone can be a borrower. You can invest. In fact, the next what we have coming up once we release the mobile app is how anyone can become an exchange. So you can become an exchange without even owning any coin or owning any naira. So we have liquidity providers by ourselves. So anyone can become a liquidity provider. So this thing I'm doing right now, this crypto fully, it can be co-owned. We can use your own Bitcoin and pay you in naira. And so the vision is endless for us. So that's about it. Has anyone gotten an alert yet?
I
And
think
if you have any question, please ask me.
George, I think for the alerts, they will take their time and report on the chat room. So
Okay,
that
okay.
because it's not dependent on you now, it depends on the Bitcoin network to at least give them one confirmation.
One confirmation. Yes,
And since
exactly.
the transaction is actually small, it will also take some
Okay,
time.
there's one confirmation. This last one, shooter, the one I sent,
Okay.
as got one. Please, maybe you are not getting an SMS your bank account to see if you.
At least let's have one confirmation first.
Yeah, yeah.
At least one.
Okay, so someone asked, what is the risk associated with this service? Um, risk. Okay, so um, risk to us or risk to you? Risk to us, one way we are trying to maybe prevent anti-money laundering, AML, is we have a cap. You cannot do above $1,000 at a time. If you want to do more than $1,000, you will need to go through our KYC process. So that's it for AML. For any other risk, there's I don't know. I can't think of any or other. Okay, risk to you. The risk to you in our platform. I don't see any risk to you. Because I don't know. We give you your transaction receipt in case you have any issue. You can always get back to us. We are super fast. Okay, so someone just confirmed they just got an alert. Okay, great. Thank you, Victor. Yeah. So someone said, if you send money to the Bitcoin address a day later when price has changed, we are going to always have updated rates. So there's a timer on the platform that, yeah, see, it will keep refreshing, because BTC. So one thing we got feedback from was that we should add the rates we are changing at every point in time. We are going to add it to the platform, but rates. So we would always, so 0.0174 can become $9, or can become $12 in the next 30 seconds. So it will keep refreshing every 30 seconds. So you can get more or you can get lesser. But if you send within the time window that we are locking in, which is 30 seconds, you will get the amount you. Okay, so someone else has also gotten an alert. So you can see how easy it is to convert. Also follow us on social media. It's at CryptoFully, Twitter, Facebook, Instagram. Um, we have some exciting things that we have lined up. Please just follow us. You would retweet some of our initiatives. So we have a lot of stuff. We have lending, borrowing, savings, also cross-border, sending money from Nigeria to Ghana, from Kenya to Nigeria. So thank you. I can see everyone is confirming that they got a lot. So you can see it's super easy to exchange your Bitcoin for your local currency. Remember again, this is our minimum viable product. So if you have feedbacks for us, we will deeply appreciate it. We love feedbacks because that is how we are not building for ourselves, we are building for you. So let us know what you think. Let us know how best we can improve, what we can add. We will definitely do so. Thank you so much.
Thank you so much, Torres C. That has been a marathon 25 minutes presentation and a demonstration of a working product. I'm sure feedback will flow in. And this is the type of product that we actually need to build in the blockchain space to show the efficiency and the rapid utility of such solutions. Thank you so much. And we're ending the session now.
All right. Thank you.
I've not even seen Faith in this platform this morning. She's doing her trade. She said yesterday she missed trade. Hello, ladies and gentlemen. I hope we're still catching all the excitement of this conference so far. I believe that we are delivering unquestionable value every single hour. Our next presentation is coming from Kristen Roche from Kinesis. Kinesis is a project that I have the privilege of being on the advisory board for West Africa. I always believe that good products sell itself. I don't make so much noise about that product because it's a product that guarantees people's future. And in this presentation, Kristen will be showing a whole lot of efforts that Kinesis is bringing into the blockchain system to create an alternative financial system that anyone, anywhere in the world can leverage. Kristen is the head of Africa operation for Kinesis. Kristen, this is your moment. You're online.
Thank you, Shemezi. Thank you very much for having me online, and hello to everyone around the world in Africa. It's certainly a privilege to be online. And Shemezi, I just want to thank you for your hard work regarding blockchain in Africa, being an advocate, for what's going on in the space, and also creating awareness around, how this space is changing people's lives and how we can utilize the space to change people's lives. I'm not sure, can everyone see my screen or not?
Go ahead, we can see the screen.
Can you see the screen? Okay.
Yeah, we can see the screen. Go ahead. Yeah.
Great stuff. So, as Shemezi mentioned, I'm the head of Africa operations for Kinesis Money, which is a remarkable platform, and also in a platform that hopes to engage with the larger audience within the African landscape. I'm from South Africa. I've got a history in training close to 5,000 to 6,000 rural men and women entrepreneurs in business entrepreneurship, building a business online, and of course, building out, the product, for their vertical markets. So over the last 10 years, that is what I've been involved in on a voluntary basis. But I've always been an entrepreneur that's been looking for, I wouldn't say the next big thing, but something that makes a real difference in people's lives. I've got tremendous passion for Africa, and I do think that Africa can grow its economies from inside. So I've started this forward, just to kind of spice things up a bit. And a lot of these things, we've discussed this during the last 2 days. Yesterday morning, through to the afternoon, and of course today, during our discussions, we have highlighted, some of the key factors, and it'll probably still come up as well in terms of how do we accelerate the growth of technology, blockchain, and the usage of these platforms within the African landscape. So there are a number of things, that we can look at, which is education, accessibility, infrastructure, opportunities for market entry, lack of investment into small business, high banking costs, communities are unbanked or underbanked, and this is financial inclusion. Now, we understand in the African landscape, not everyone has the ability to get banked, and this is an infrastructure problem, it's an educational problem. And when I say educational, I don't say it's very wide. Education is very wide. I say financial education. Not everyone understands what finance is all about, and we need to be the pioneers in showcasing how finances can be changed for the individual person on the street, the middle class family, the mom and dad that goes every day to work. And of course, the business owners, how do we create opportunities for them for market entry, be it physically or online? We've seen with COVID, the remarkable change in online business, the growth of it. But with that, we've also seen the decrease of our technology sphere. As online business increased, our bandwidth of our technology decreased. How do we deal with all of those things in terms of the new age going forward in the next 10 years and making sure all of these things fit together so that both people can experience economic growth and socioeconomic development or advancement in rural areas as well as the metropolitan areas. So I'm just going to give a bit of a background on Kinesis. So Kinesis was founded by Allocated Bullion Exchange, which is basically the world's foremost electronic exchange for spot physical precious metals. It was founded back in 2011. And over the past decade, the better part of the decade, Allocated Bullion Exchange CEO Thomas Coughlin and his staff members worldwide worked on building out infrastructure, critical infrastructure, such as storage, physical bullion suppliers, the vaulting space, and also building out their own trading metal desk for your institutional investors and and traders in order to trade their precious metals. Also, ABX, Allocated Bullion Exchange, are pioneers in the precious metals industry. Whatever goes on in the precious metals industry, they know about. It is just one thing that I can say about Allocated Bullion Exchange. Anything that's happening in Africa, anything that's happening in South America or elsewhere in the world, we have a clear indication as to what the trends are and what the world is moving towards. Then there are some critical integrations happening. with the Deutsche Börse, as well as the European Commodity Clearing House. So this is important for precious metals and for ABX and Kinesis, because this will give us a major liquidity, leverage, market leverage, also precious metal supply into our system. And just give us a better scope in managing how our reach in the precious metal space. So this is enough about allocated bullion exchange. Now we go to Kinesis, and why does Kinesis exist? Now Kinesis was formed by allocated bullion exchange about 3 years ago. Our CEO, Mr. Thomas Coughlin, just looked at the marketplace and decided to create a system which is differentiated from Bitcoin, Ethereum, and also other players within the market, and therefore created a monetary system. The Kinesis team used the Stellar blockchain, the legacy Stellar blockchain network, and developed an advanced proprietary blockchain network that would run the entire Kinesis digital currency suite. So basically, we've got two digital currencies at a stage, which is actually digital assets. And this is gold and silver, KAU and KAG. Now, the difference between our gold and silver is that it is not backed by gold and silver, because there's a big difference between backed and allocated. By backing, it means that you've got a coin value lying within an exchange, and then you hope, as with USDT, that there is a underlining or underpinning value that's given to that gold or to that USD or to that coin. In our case, the gold and silver is physically allocated 1-to-1 to the actual coin, and it belongs to the individual that purchases the coin. So it is basically a situation where we give ownership of precious metals to the actual individual, be it an individual, be it an institutional investor, or any person that makes use of our system. As I've explained just now, we've got the one-on-one allocated physical gold and silver currencies, but we've changed this a bit. Typically and traditionally, gold and silver does not have any yield whatsoever. Now, we have created a solution within our Kinesis monetary system which pays out a yield based on participation within our infrastructure. In other words, money is all about velocity. So imagine, for argument's sake, Shemezi sits in Nigeria, I sit in South Africa, I've got an Apple, and he's got 1 Naira. Now, he wants the Apple, and he wants to spend it with these Naira. As soon as you start sending money over to me, okay, so it comes to me one time, I give him the Apple, he gives me the Naira. So now what we've done is we've taken the blockchain and we've sped up the process in terms of how quickly we can interchange an Apple for a Naira and vice versa. And out of that, there's a transactional value that occurs. So instead of using 1 day to do 1 transaction, we can use 1 day to do 10 transactions for which each transaction will have a transactional cost. That transactional cost goes into a yield pool. Now, the yield pool is basically of all the transactions within the network and all the velocity within a network goes into that pool, and is then redistributed back into the participation of the ecosystem or of the monetary system. In other words, The individual with a Kinesis wallet, who's trading or sending his funds or using it for for spending, buying clothing or buying a car or buying a toffee apple, whatever the case might be. That is where these yields can be or where these yields are generated and redistributed to the actual individual. So you can spend it on your Kinesis debit card. We've got our Kinesis exchange where you can take your KAU and KAG and basically trade it against BTC, USDT, Ethereum, Euro, and USD as well. Of course, I think many people will ask whether these metals or whether we have auditing that happens on the metals we claim that's in the vault. Yes, we do auditing on all of those things. In fact, we've done our first auditing earlier this year by a third-party auditor, and it is accessible on our website. And this will show all the gold and silver lying within our vaults, which belongs to the people that created the gold and silver currencies. So, and that brings me to another point, of course. The Kinesis currency suite, the KAU and KAG, there is not a maximum number of coins on the market. These coins needs to be created, and that is created either by what we call institutional minting or individual minting. Now, minting is a process where an individual will load fiat into our system and mint the equivalent value of USD or Naira value or Rand value or whatever fiat currency they're using to the gold or silver price, which means that you mint all of that new currency into existence. Now, this is important because the actual cost, the actual price of the coin will never decrease or increase based on the activity on the exchange, but it will stay constant and have a very tight spread on our exchange. So you won't see the typical Bitcoin. One day it falls $100, the other day it goes up $300 and it goes down $1,000 again, etc. But you'll see a constant, very tight spread. Which makes it easy for people, to do quick, short type of tradable, depending on your model as individual, but you can do quick, short trades, and build up your income or your holdings based on those smaller and shorter trades. Now, the other interesting thing about the system, and I think this is also where we look at Africa for argument's sake, is in South Africa, before the end of this year, we are hoping to deploy in 134 communities, agricultural communities, with about between 20,000 and 250,000 community members. But there's one need within these communities, and this is, the need for their own financial systems, their own wallets, their own, because every community, have a different way of doing things. One is a cotton farmer, the other one is a poultry farmer, the other one is a maize farmer. But collectively, they have their businesses. So what we have done is with our partners, African partners actually, is to design a system which will make a specific community their own central bank. And this is where Kinesis fits in so brilliantly. You don't have to have the actual central bank that plays a role within Kinesis, but you have all of these smaller communities that becomes their own central bank, minting their own currencies and distributing their own currencies amongst, the workers and the entrepreneurs and business owners, within those communities. So this is one exceptionally amazing type of initiative that we are busy doing. And, this will certainly be one of those initiatives which we will take out of South Africa, and we will copy it, in Zambia, we'll copy it in Mauritius, go up into Nigeria, Congo, etc., etc. So this is what makes an impact in people's lives. So the next slide is basically just explaining, what Kinesis as a full circle monetary system means, and all the elements and functions that builds this monetary system. So yeah, on the left hand side, you have your Kinesis partners and distribution partners. And this is basically your liquidity providers, your white labelers, sorry, your merchants, influencers, network marketers, whatever you name it. Those are the individuals that will become involved and are becoming involved in the Kinesis monetary system, and creating their own little central banks and exchanges, and it's exceptionally engaging and interactive, with all of the companies and individuals that's coming on board onto the actual system. So this slide explains exactly what the system represents. The Kinesis financial network, the Kinesis exchange, the Kinesis mint, that is where you mint new currency into the system, and the Kinesis commercial center, which then gives entrepreneurs and small business owners access to an international market. And we should probably go live with the commercial center very soon and start attaching all of the smaller entrepreneurs and business owners into this commercial center for them to have a market that spreads worldwide, and they've got access to social media, Facebook, and whatever social media platform there is, where they communicate their business offerings through to the mass global audience. Again, as explained earlier, on every transaction, Kinesis takes 0.45 basis points on all transactions. This, of course, goes into master fee pool, and then a proportional percentage is distributed back to our users, and this depends on the applicable yield. So applicable yield, we've got 4 different yields. The first yield is the Minter's yield. As explained earlier, the Minter's yield is basically yield which allows for user to on-ramp fiat currency or physical gold and silver holdings into our system. And when they do that, they are eligible for proportional 5% perpetual yield, as long as they are Kinesis users. Then we have the depositors yield, we've got the referral yield, and we've got the holders yield. Now the holders yield is very an interesting proposition, for the reason that during the time that we have had meetings with numerous pension funds and investors, etc., the holders yield is basically like a savings account, where you once you've minted your gold and your silver, you'll hold your gold and your silver within your wallet, and for as long as you hold your gold and your silver within your wallet, you will earn from the master fee pool. You'll earn a 15% proportional perpetual yield on the amount of time and amount of precious metals, gold and silver, you have within your wallet. This is our exchange. It is live for everyone to access. We're currently increasing our capability of on-ramping fiat into our exchange. We've got in South Africa, we will be doing a hybrid type of system, which allows for a fiat wallet, a Kinesis fiat wallet, and a Kinesis exchange wallet. That will mean that you'll be able to unramp your funds via fiat wallet, purchase KU and KG on your fiat wallet as well. And also, once you've created your fiat wallet, an automatic wallet will be created for you on our blockchain wallet. So, it's going to be a very simple, easy way for people to manage both their fiat currencies and spend daily in fiat currency, but also a way of people accessing their blockchain wallet in order to do trading, sending via the blockchain, international remittances, etc., etc. So it's very intuitive and available. Right now you can download it on your iOS and Android and access it via via the website. So the reason for this is not so much so to talk about Kinesis in terms of a product presentation. That is not at all my intent. My intent is to talk about Africa and also the potentials that lies with Africa with reference to blockchain. So we all know by the discussions that we've had, and that's why we on this call, yesterday and today, to talk about blockchain, decentralized finance, what type of applications can make a difference in people's lives. So, in Africa, we've got this one advantage, which is, and earlier on, Shimezi's, presentation is, I think, if I'm correct, Africa needs blockchain more than blockchain needs Africa. And Shimezi, you might actually, disagree with me, but I think, blockchain needs Africa more than what Africa needs blockchain. And it's also applicable to the rest of the world. I think the world needs Africa more than what Africa needs the world. Shimezi, you there?
I agree with you. Yes. I agree with you totally.
Yes. So basically, Africa has a history, and from a colonial past, and we all need to be very honest about it, which has disrupted the processes and the growth of Africa, and it is time now to do so. I think, irrespective of whether COVID happened or did not happen, Africa is on the right track to achieve various milestones in terms of technological development, in terms of getting its industries together, and becoming more of an active player and not a reactive player within the global economic landscape. Africa is the frontier. So, what type of opportunities does blockchain have from a precious metals perspective within Africa? Now, if we look at, for argument's sake, artisanal miners. So we've got Ghana, Guinea, we've got Angola, the Congo, even South Africa, Kenya, and to some extent Rwanda. You've got your artisanal miners within this area, all trying to find a way to make use of their daily efforts in order to earn a living for their families. And we're talking here about honest livings. We're not talking about militarized type of mining. We're talking about every day a man and a woman going into a river, going into a minefield, and looking for gold or silver or any other precious metals in order to sell this to a middleman or to someone that will eventually export it to another country where it will be refined. Now, we all know that artisanal mining forms part of the socioeconomic sector in rural and developing countries. So we as Kinesis, what we have done is we have already started designing, putting together a value-added value chain for artisanal miners, where they have their wallet, they do their daily mining, and then I've got a central place, a central office where they will go to and place their names, their details, and so on via a QR code onto a centralized system. It will book, that they have been there, that they have delivered, the gold, in raw form, in doll form, to the actual office bearer, and from there it will go into the blockchain. Now, this is very important because in many cases, gold and silver, especially gold, is used as an easy way to launder money, to get money out of the country. There are many stories where gold is used for this particular purpose. We are trying to get us under control and say, wait a minute, gold is not something that that should be financing money laundering or a military type of action against its people, especially from a country perspective. But it should be something that enhances the economy of a specific country. So if you look at the Congo, for argument's sake, you've got $38 trillion of true raw wealth lying beneath the soil of the Congo, but they've got absolutely no way of tracing that, that minerals, the diamonds, the precious stones and the precious metals that is within the Congolese soil. And yet again, we've had numerous discussions with top officials within the Congo, and also the Congo switchers, finance switchers, banks, and so on, to see how we can actually make use of the Kinesis blockchain and the Kinesis network in order to bring in that wealth, build vaults within the Congo, bring in that wealth and make that wealth part as a secondary monetary system for the Congo. And I think that is one very, very important aspect to be looking at. So instead of a country trying to create a stable coin out of their own currency, we can supplement their currency by creating an alternative precious metals, precious stone, or whatever asset, underlying asset, they want to use to allocate that currency in order to build their monetary system. So it plays a supportive role to, while central banks on a daily basis makes use of the currency base in order to build financial inclusion and make these things accessible to individuals. And that is basically what the Kinesis monetary system is all about. It's all about bringing instability into a specific sector, into a specific country, but yet whilst bringing instability, we also bring the opportunity for upliftment, socioeconomic development, advancement, and accessibility to financial solutions, which can easily attach to a gold, silver, multi precious metals type of platform, which will allow Africa and countries within Africa to be able to pull out the true wealth out of their soil, distribute it equally within their communities, and make their communities ultimately successful. So that is from a precious metals perspective. And then when you come back to the actual country, so earlier this year, before the COVID lockdown, what we have done is we have looked at how can we assist the taxman to bring in extra funds from the taxpayer. But there was a bigger thing, that there was a bigger type of point that was at play here. We had a meeting with the South African Revenue Service, and every single year the South African Revenue Service repays $2 billion to gold traders in BAT. And there's a simple reason for why they are doing that. And it's a reason that they can't trace. They've got absolutely no control over that. So the gold trader will, for argument's sake, take jewelry. They will melt it into, 1 kg gold bars, and they will fly to Dubai. They will find a buyer in Dubai, and they'll fly to Dubai. So they go to Dubai. They make the supposed sale. They will come back to South Africa and submit a VAT invoice to SARS, and SARS will pay out, that will give the VAT redemption. Now, that is a major loss to a country, firstly. Secondly, it is fraudulent. And thirdly, there's absolutely no traceability as to whether that person actually did make a sell or where that gold is at this stage. So we have discussed how we can use the blockchain, our blockchain, with the partnership of, various technology providers in building out entire value chain for that process as well. And to be quite frank with you, it was an interesting discussion to see how we can actually change how the revenue services are able to track and trace, gold, silver, platinum, diamonds, which is very, very difficult. Well, diamonds especially is very difficult to trace in the traditional sense, due to the black market, and it also being used, to finance conflict in certain areas. So from that perspective, we have worked with revenue services. We are working with central banks as well, because we want to find a balanced approach with central banks as well. And then, of course, going further, into the fintech space, Kinesis also founded this African fintech hub, or was one of the co-founders of this African fintech hub, through which we have contributed to setting up some of the current discussion papers and regulatory papers on what the central bank's African Reserve Bank needs to do with cryptocurrency, digital-backed currency, digital asset-backed currencies, etc., etc. And that we have also copied in, Mauritius. We are pushing it up into Zambia, Uganda, Congo. So with the promote financial inclusion within the African landscape. So Kinesis is an exceptionally massive project. We certainly didn't expect the level of interest that we have right now, the growth as well. We've had various companies contacting us over the last year, asking to connect our KAU and KAG into their payrolls. And we're busy with payroll integration, payroll solution as well, integration, which will allow an employer to mint new currency into the system and pay their employees either a small percentage in gold and silver, or the entire salaries in gold and silver. Further to that, we have done I've done major integrations with banks in Africa to have access to merchant POS systems. And we also have our own merchant POS system that we are currently deploying. So that will make, KAU and KAG payments far more easier, either by debit card or near field communication solutions. So in a nutshell, we have literally developed an entire monetary system which can be plugged and played anywhere in the world, be it East Asia, the USA, Europe, South America, or Africa, and what benefits one individual benefits the other individual in terms of participation. In a nutshell, ladies and gentlemen, that is Kinesis, and some ideas on blockchain, the precious metal space. And there are plenty more ideas as well. But in terms of timing, I think I've tried to explain as much as possible.
Thank you so much, Chris. Thank you so much. We really appreciate how detailed you have been. I will tell you that even though I've been with Kinesis for a while, what I've heard now also have increased my knowledge and understanding of what is in stock for this amazing project. I don't know if we have any questions. If you have any questions, you can either raise your hand and we'll hand you over the microphone, or you can ask a question using the chat box that is under the particular session that you attended. And in the absence of that, we would want to close this session so that we can jump into the next power session, and we'll be able to interact privately also.
Thank you, Shimizu. Thanks, everyone.
Yeah. Policeman of sake. Inspector General. Hello, gentlemen. I hope you're getting the best out of this conference. We are now getting into the very heartbeat of this entire gathering. And it's always a solemn moment to listen to Timi Agama, the Inspector General of the Financial Estate of Nigeria. Okay, so I'm always honored to have him available. He always dedicate time to explain, to show that SEC is not a bulldog that is looking for somebody to bite, but rather a comely dog that is courting the love of the people that play in the ecosystem. Timmy, please, we will enjoy you as we have always enjoyed you. And I know that you do very good justice to this subject matter that has always made some people to sleep with one eye open in the ecosystem. Please, let's make welcome Timi Agama, the licensing and registration at Security and Exchange Commission in Nigeria. Timi, thank you. You're online.
Right. Thank you once again, Tutor, for this opportunity. Each time I am called upon, I don't see it as a burden, because I know that as a staff of the SEC and the securities regulator, I have a responsibility to be able to share my knowledge, to be able to enlighten people about what we at the SEC see in this space. And more importantly, letting people know that yes, we have been slow in coming, but we are surely coming. And that is, for me, a very important information to share with you. And I promise you that we are coming earlier than you can think will come. I've been asked to speak on the riding wave of virtual financial assets and staying regulation compliant. That's the topic I was given. And I will be speaking just round about it. And clearly to encourage all of us, especially for those that want to do good business, that, yes, it's good to do good business. And for those that intend not to do good business, to let them know that time is running out for them to start thinking about moving into some other areas, or getting compliance, or setting themselves for compliance, as the case may be. So that's the beginning of what I want to say. Yeah. So what have we done so far from the SEC angle? The virtual financial asset continues to grow, the players continues to multiply, and the infrastructures are also everywhere, with people testing and doing so many things, wanting to exercise their entrepreneurship, or more so their youthfulness in this space. So you have so many people coming in that you need to do one or two things to get people market. The aim of the SEC in wanting to regulate the financial market is purely for investor protection. Who are the investors? The investors are Nigerians, the people that you all want to court in inviting them into your platforms, in inviting them to share part of your product, in inviting them to be part of your stakeholders. These are the investors. Who protects these investors? The institution that is saddled with the responsibility to protect these investors is the SEC, the Securities and Exchange Commission, empowered by the Investment and Securities Act 2007. That act clearly states that the SEC is empowered to register and regulate all exchanges. All exchanges means all exchanges. That is, it could be securities, it could be commodities. And of course, virtual financial assets fall into either of these categories. They could either be securities or they could be commodities. Hence, the regulation of that space is ours. The regulation of that space belongs to the SEC. And that is what prompted us to start our journey of creating the FinTech roadmap through market collaboration. After doing that, we knew that it was not enough for us to set out the FinTech roadmap. It was more important also to granularize what we have done. And in that level, in that state, in the desire to do that, what did we do? We set up the Blockchain and Virtual Financial Assets Committee. This committee went granular in terms of what we are talking about, in terms of what blockchain is and how we see it, and in terms of virtual financial assets and how we see it. The culmination of that activity is going to be the release of a statement by the SEC regarding what we see, what we think about that space, regarding what we see as virtual financial assets, and regarding what we think we need to do to be able to regulate that space, and what the investors, the players in that space need to do to be able to get compliance with regulation, so that at the end of the day we are going to be able to sieve the chaff from the corn. Because as we speak today, we are aware and we know clearly that we have a ton of charlatans in this space. A ton of charlatans in this space. And we are also aware of the level of fraudulent practices that are happening in this space. We are aware that some people are not happy or are not even desirous of being regulated. We are also aware that some people are already, stealing from the innocent investing public, because I could not find a better word to describe it other than stealing. Proposals are being made every day to unsuspecting investors who willingly, in their desire to make money, in their desire to make investments, get bonds in the process of wanting to make investment. That for us is not a good thing. That for us is not something we want to encourage. And that is why we would, in just a very, very short time, possibly next week, be releasing our statement on what we think about crypto assets, what we think about virtual financial assets, and what we think about regulation and going forward, what should happen. The reason why we have not done so much, as it were, is that when there is no regulation, there is no offense. But once we decide to put out a regulation, then every violation and every activity contrary to that regulation becomes an offense. And we would, without fear or favor, unequivocally, and no matter whose us is God, come full force on anyone that does not comply, because it becomes, it becomes a violation. It becomes an offense against the state of Nigeria. For the SEC represents the state of Nigeria, and everything that we do must tally with the state of Nigeria, the laws of the land, and so whoever it is, local or foreign, that operates within our clime, that operates within our space, must comply, must conform, and of course subject themselves to regulation. We sure will have a window for everybody, and that window will speak to the fact that, okay, you've been doing this business for a while without regulation. How do you transit to the position of regulation? What do we need to do? What we need to do is to engage. We will continue to engage. We are open to engagement, and we will jolly well enjoy engagement with everybody in the space as of today. So what we expect people to do is that all this while we've had a form on our website, and that form is specifically, a data collection form of people wanting to operate in this space. We expect that everyone, after the release of this, document or this statement, will go fill those forms, get themselves dataed up, and then we start doing the engagement as to where each and every one of us fits into. And the idea is simply not to scare anybody. The idea is simply to make sure that all that we are doing conforms with the law, that people, our citizens, Nigerians, for which we work for as the SEC, are comfortable with what is happening in our clime. We will not encourage people, even from outside our clime, to come and dupe our people. We will neither encourage our people to dupe our people. So as the SEC, having been working with the blockchain user group and every other group that we know that have come to us, we believe that cooperation is the best solution to solving the problems that we have seen thus far. Cooperation is the best, and collaboration is the best means of creating an ecosystem that is enviable. Cooperation and collaboration is what is required for us to have a successful virtual financial asset economy, and also to encourage the young and budding entrepreneurs in this space to be comfortable with what needs to be done and what should be done, both for the enhancement of their personal life and businesses, and also creating alternative investment models for people who are interested in, playing within this space. So at the SEC, ours is to do the needful, and the needful is to create frameworks, put around the regulation, put around, rules and regulations that will assist everybody that wants to operate properly, to operate within regulation, to operate within compliance, and to also safeguard the integrity of our great country, Nigeria. We do not have any other country other than Nigeria, and whatever we need to do to get us on the map of integrity, on the map of good governance and compliance, we will do at the SEC. But suffice it to say that the SEC is not oblivious of the opportunities that, are in this space, the opportunities that this space presents to its teeming youthful population. Hence, we are treading softly. Hence, we are inviting people to the table. It is not about, striking people. No, it's about inviting people to the table for discussion, for collaboration, and also to build them up. Because as you are aware, I'm sure, that the SEC has two mottos. The two motto is one, regulation. The second one is market development. On the premise of market development, that is why we must collaborate, we must engage, we must discuss, and we must understand what everyone is doing. The major risk in regulation is risk management. The major risk in regulation is risk management. So it is important that we understand the risk around the businesses that you do. And sometimes we have discovered in our work that even as we speak, most of the institutions or businesses or entrepreneurs do not even understand the risk around their businesses. One of the things that the SEC will do and continue to do is to make you, the entrepreneur, make you, the crypto enthusiast, make you, the virtual financial asset enthusiast, make you, the digital exchange operator, understand those risks. And once you understand those risks, we need to work together to provide solutions to mitigate those risks. Because if you do not mitigate the risk will be double. The risk will be double both for you, the investor, and indeed the nation. And it will be wrong for the SEC to be there and this is happening. Then it will mean that we are not living up to our responsibility. On this note, I wish to thank those of you that have shared a hand of fellowship thus far, those of you that have reached out to the SEC when you discover that something is wrong. We have tactically been able to stop some unscrupulous attitudes and actions, and in doing that, we've been able to save a lot of Nigerians the pain that would have come out of such actions. We believe strongly that this space has a lot of promise. We believe strongly that it is important that every one of us is interested in seeing how best this space will flourish. It is very, very important that on our own as entrepreneurs, on our own as visual financial asset experts, on our own as crypto enthusiasts, we are able to flush out the people we know will be spoiling the soup of cryptocurrency. There are people already infiltrating your space and causing a lot of problems that some of us have seen already. Just Friday, I had a lecture for the EFCC, and in that lecture, I made them to understand the importance of this sector. And I brought to light the need for cooperation among regulatory agencies to watch out for the original bad people. And for those people, I'm sure they should start, packing their load, because sooner than later, the time will be up for them. But more importantly, I want to encourage everyone that is doing good business, everyone that is regulation compliant, everyone that has a good purpose, everyone that wants to see the use of blockchain, cryptocurrencies, virtual financial assets in the propagation of a good economy to just continue in that light. The saying goes, if you want to do well, you just go to move right, turn right and go straight. But if you want to do badly, you turn left and go straight. When you go left, you are going the bad way. When you go right, certainly you are going the good way. And for the SEC, for anyone that decides to go left, going the bad way, we are there waiting for them. And for those that decide to go the right way and move straight, we will definitely work with them. And at the end of the day, we want to believe that our contribution to this space and to this economy will be something that will be written in the annals of the history of this country, knowing fully well that all we desire is to build a great country, a great economy, and indeed great fintech entrepreneurs. My pleasure to be here, and thank you once again for the opportunity to have this speak.
Thank you so much, Timmy, for this awesome presentation, awesome session. I believe that there are people who have questions. Please, you can use either the chat box to ask your questions, or you can raise your hands and we'll hand you over the microphone. I can see somebody's hand up. Let me give you a microphone. Coin News Extra. You have the microphone now.
Okay, thank you very much. Good day. I am Lee, the CEO of Coin News Extra, a media platform that reports about blockchain and cryptocurrency. So I've been able to hear and to listen to what Timmy Agama said about the SEC, what they want to do in the ecosystem. So my question is, when it comes to regulations, we are looking at the exchanges for cryptocurrencies. So there are some about two categories of exchanges when it comes to cryptocurrencies. Are there plans they have for crypto exchanges that are not converting to Naira, like exchanges that are trading crypto to crypto, and the ones that are trading crypto to Naira? Are there plans they have? And the way, when he was starting his speech, the way he was sounding, is it that the SEC is not happy with what is happening in the crypto space? That's my question.
Okay, to me, please, can you...
Okay, I will quickly answer from the back. Yes, I will answer from the back. That's the last question. The SEC is overjoyed about innovation, but the SEC will not be happy with a fraud in the space. So, in terms of being happy with innovation and good things that happen in the space, the SEC is overjoyed, and we will cooperate, continue to collaborate to make sure that what we have is something comparable anywhere, it's something we can all be proud of, it's something we want to lend our names to. That is one. Then going to your last question. The ISA Section 13 of the ISA Investment and Securities Act Section 13 clearly states that the SEC regulates all exchanges. And by exchanges, we mean digital asset exchange, equity exchange, derivative exchange, metal exchange. Every exchange is regulated by the SEC because we license them. So they have to come under our regulation. The rules on digital asset exchange is in the works at the SEC. As you are aware, just last week, we issued the rule, second rule, on the crypto on crowdfunding. That is part of fintech. That was the second time we're issuing it after receiving comments. So the one for digital asset exchanges is also in the works. We are also going to we have also created a framework, which is more or less an incubation framework for people who don't understand exactly what they are doing, and want to know how do you want to go about it. So that one is also going to come out. So far from it that the SEC is not happy with innovation, no. The FCC will only not be happy with the bad guys and will come after the bad guys, especially when it is within our regulation. And talking about crypto to crypto is digital exchange. So once it's an exchange, it is under the regulation of the SEC. And I need to point out here clearly that there's a difference between the issuance of a cryptocurrency, and the trading of a cryptocurrency. The issuance of a cryptocurrency is the sole responsibility of, especially a national cryptocurrency now, is the sole responsibility of the Central Bank of Nigeria. But the trading of a cryptocurrency on an exchange is under the purview of the Securities and Exchange Commission. I need to make that clear. So I hope I've answered your question. Or feel free to ask more questions, because the essence is to make things clearer.
Okay, thank you very much. You have answered the question. I don't have any other question.
Okay, thank you, CoinNews Extra, for your question. Please, if you have another question, anyone else, you have any question, the right man to ask this question is this man that is currently on this hot seat. And it's better we hear from him than asking me what he said or what they are doing or what they are planning to do, because I happen to be a member of the committee. This is a man that will give you the accurate 100% information. Please ask the question now. Are there any question? You can meet him privately, of course, and you can chat with him on the networking environment. Mr. Timmy, please, we'll ask that you remain a bit more.
No problem.
We ask that you remain a bit.
No problem. I see a question here. Is it legal in Nigeria? Hello, Chuta. I see a question here which is asking if it is legal in Nigeria to trade Bitcoin. Yes, it is legal to trade. You see, Bitcoin, like you know, is a fluid currency, cryptocurrency. And to trade it on an exchange, as far as we are concerned at the SEC, there is no law stopping you from doing it. And that is the reason why we are building regulations around the trading of any cryptocurrency whatsoever on an exchange. Once we register an exchange, once we start registering exchanges, every trade of a currency, either Bitcoin, Ethereum, OneCoin, TwoCoin, ChutaCoin, whatever, must be done on a registered exchange. So that is the way we are going. And if it's anything done outside that, will be an illegality at that point in time.
All right, thank you so much, Tony. Please stay put. I'm going to add His Royal Highness Oloniteru Olutoyin. Please, I'm going to add you to the platform as the moderator of the session that will start now. Is a panel session. Forgive me for wrongly pronouncing your name. I learned some of these things. I'm also adding other panelists. Where is Bolaji? Mr. Oni Owonabi Deji. Okay, so what? Okay, gentlemen, we're up again with another session, this time focusing on trading cryptocurrency profitably. And we have none other person but a very professional person in the entire process, James Jamar. He is the founder and CEO of Digital Currency Guy. Yeah, it's the DCG Group, DCG
Right.
Mastermind Group. Yeah, right. But you are the digital currency guy now. Yeah, I'm right. You are the digital currency guy. So, yeah, you're on.
Hey, how you doing? Hey, thank you. Thank you for having me. And so, I wanted to kind of say that trading, with the introduction of cryptocurrency and blockchain, trading has changed. Traditionally, guys have in the last 40, 50 years, they've used charts. They've kind of looked at patterns to actually make trading decisions. And, of course, charts and looking at the market through traditional means have, that's what's been normally taught. I like to say that, with the introduction of blockchain and cryptocurrency, trading is becoming more transparent. And, with the introduction of blockchain, trading is transparent. Every transaction that goes through the blockchain can now be seen on the blockchain. And so, there's dark pools that are disappearing. The traditional stock market, the forex markets, they have so much more volume and there's so much more manipulation. There's manipulation in all trading. There's market makers that are able to move the market. But with the introduction and how we approach the crypto markets, we're able to spot a lot of the manipulation. And there's tools that are available now to the average person that historically hasn't been available in the traditional markets. So trading crypto versus trading, you say the stock market, a average person was at a huge disadvantage. Trading the stock markets, not being able to get the access to certain data because you're considered a retail trader, meaning that you're a little guy that's trading in a big pool. And a lot of disadvantages has traditionally been there for the little guy, the retail guy. You weren't able to get certain data feeds. You had to have a larger account to enter the market. Cryptocurrency has changed that aspect for the average guy. Anyone that has a mobile phone can now get into trading, and there's no barrier to entry, meaning that there is a minimum amount that you have to have. Whereas in the traditional markets, in the stock market, a lot of times the brokerage wouldn't allow you to open an account unless you had a certain amount of money, 1,000 to 2,500 to open an account. You weren't able to long and short the market unless you were on a margin account, which a lot of the traditional margin accounts started at 25,000 US dollars. So, that barrier, prevented a lot of people from entering the market. And then the guys that entered the market, they entered the market at a huge disadvantage and traditionally has lost money trading. And, the traders that have been in the markets, normally their bank accounts have been manipulated where they come into the market and they lose money. 90% of the traders have lost in the traditional markets. Whereas in crypto, time is on your side and mass adoption is also a benefiting factor. So sometimes time in the market is better than timing the market, which gives the advantage to the average person. You actually have an advantage trading crypto because you can see funds coming in and out the market. And so, I've had a course that I kind of call it my 7 steps to trading crypto. And, historically there's 2 types of traders. There's a technical trader and there's a fundamental trader. And coming into the trading space in crypto, we are able to teach guys fundamentals in trading crypto. Whereas, most people that enter the stock market and enter Forex, they enter through someone that's teaching them technical analysis, teaching them how to look at the charts, and they're teaching them speed, right? They're teaching them how to trade in and out based on a pattern that, can't really be forecasted. Every day is a new day trading forex and stock market. They go into the market and they look for patterns. They look for charts. I like to say that in the DCG Mastermind, which is a think tank, just a little bit about me in the background is, I have a computer science background. I have a technology degree, and I got into trading in 2009, and I got into trading as a swing trader. Prior to that, I worked for a company called Pacific Life, which was which I received a Series 3 and a Series 6 license, meaning that, I was able to look at mutual funds and 401ks, insurance, things of that nature. And there's an advantage that when you're in a 401k and you're investing through a managed service or a third party, they're telling you to just stay in the market. The market goes down, goes up. Their ideal is, stay in the market and continue to contribute to your 401k. And over a period of time, you'll come out ahead. Well, when the market is moving up and down for traditional funds and hedge funds, they're able to short up and down. So whether the market goes up or goes down, they're able to make money. For the traditional person, they just go long. And there's a lot of people in crypto that's just holders, right? They just hold on to what they're buying. And so in 2017, there's a lot of excitement around crypto. 2018, 2019, as the market drops, a lot of the holders just held on, and they're back now. But 2 years was really kind of wasted. They sat on what they had. The market went down, and of course, in crypto, it comes back because it's volatile, and there's as more people are aware, time in the market, traditionally, it's going to go back up. Bitcoin and crypto, the Bitcoin market Bitcoin has been the best traded asset in the last 10 years. It's continually go up over a period of time. Well, as a trader, I think it's an advantage that we have that we're able to move in and out the market. We're able to, the volatility in crypto and the amount of funds that it takes to move the market up. To get 1% a day, if you had $1,000 and you got 1% a day, in 16 months you would be a millionaire, right? When the average crypto moves, the market moves between 5 and 20% a day, and there are certain cryptos that move that much as well. So there's an opportunity to get more than 1% a day as you learn the skill of trading in cryptocurrency, in the crypto markets. And this creates a huge opportunity for the average person. The average person is able to pull out their phone and be in and out the market. In the traditional stock market and other markets, you would have to call a financial advisor. You would have to call someone and say, hey, I want to sell, or I want to sit to the side and go to a money market account. And, unless you're a trader, you've trusted someone to manage your funds for you. And now being a trader or learning the skill of trading, you're able to make that move a lot faster. You're able to get in and out. And so I want to show some of the tools that we have available now. I mean, as a fundamental trader, 60 years ago, the internet wasn't around. So how did people trade? How was trading done? And that's some of the things that I like to talk about is, as a fundamental trader, there are some fundamentals that, you may not need to use technical analysis. That's a tool that you can add into your trading, but sometimes you can trade into seasons. And so I think I have a small PowerPoint that we can go through to talk about fundamental traders and the difference. And then I'm going to go through some of the 7 steps that we can actually take. So let me share my screen. I'm gonna give you guys a kind of a 7-day course as well. I'm not sure if you can share my screen. Can you guys see my screen out there? If you can, let me know. Type in the comments if you can see the screen. Okay, maybe not. All right. So if that's the case, I'll just talk through. I'm not sure if you can see the screen. Trying to get confirmation from you guys if you can see the screen before I continue to go on. I got a thumbs up. All right. So the thumbs up. So let's go through a small presentation on the fundamentals. All right. So, a fundamental trader, historically, most traders, 70% of all traders are using technical analysis over fundamental analysis. And, it is easier for a guy to use a chart to trade because they can pull up a chart, they can see, they can have indicators, and it's easier for them to get access to the information through charting. Fundamentals, the markets are the crypto markets, the stock market, forex markets. They are driven by fundamentals. That means that they're driven by economic news indicators. They're driven by psychology, fear, news, historical price, sentiment. Those are all fundamentals. And one of the most key fundamental drivers is volume. And in crypto, we have an advantage that we can see volume on pretty much every exchange. We can see transactions on what's being traded. And so the typical retail person, they use technical analysis. But the hedge funds, the quant funds, the banks, they develop ways to use trade off of news, off of social media. And you can't see news or social media sentiment and human psychology. You can see the buy and sell patterns, but to look at a tweet and see how a tweet can change. Most of the trading has been taught through, RSI indicators and MACDs, technical analysis type indicators, where now you can have a president speak and type out a tweet and it changes the entire dynamics of the market. And you can have in crypto, half of, the majority of the trading that goes on is based on sentiment. It's based on, some of the projects don't even have the project finished and the price is moving up. That's based on sentiment. So I like to introduce the tools in crypto that say that the fundamentals overall in trading is changing. And sentiment and social media, these are all new ways to trade that, new traders that have been taught from things that were taught 20, 30 years ago, they haven't updated. And so, as a fundamental trader, there are certain tools that we can use that's available to everyone that we can take advantage of. There is a almanac, right? You can see the historical prices. Bitcoin and crypto, it's only been around for 11 years. So we can go back and we can actually see the date, the time, we have access to that information. And, I use this information to kind of forecast on a fundamental side of what has happened in the past. A tool like Google, Google and the internet, you can actually research pretty much anything that's going on in crypto with a particular coin, with a particular project. And so, yeah, you there? So, historically, we have, we've had tools available that we haven't really, utilized. The technology has changed. Where I'm going to show some tools that's in crypto that you can actually see the exact amount of pings coming in. You can see the exact amount of trades. You have transparency. And so when it comes down to strategy, there's strategies where, a guy looks at a typical trader in the traditional markets and he's using a chart or he's drawing up candlesticks He's looking at patterns. Inside of crypto, it's possible to trade without using a chart. And there's also a thing called cycle trading. Every year there's money moving in and out the markets in certain months. In April, historically, is a good month for trading Bitcoin. Also November. Those are two of the best months. And so you can get in and out the market based on certain months of the year. March is normally a down year. Down month in the month of Bitcoin. Also, September. September has historically been a time where funds come out of the stock market. And October and November is a positioning month for crypto, normally rises into December. So there are certain patterns, we call it cycle trading, that can be, can be deployed. So that is, that is the question that we all have is, how has trading changed crypto? There's the opportunity. There's holders that just hold. There's tools that are available. The price, the news, and information. That is an important part of trading now. And the timing of how long you're going to be in the market. A lot of us seem to believe in crypto that as long as we are in the market, we're holding, it's going to go up, it's going to go down. But overall, a lot of people that's in crypto, they believe in it. They believe that this is the future, so they don't trade it. They just hold it. But you can compound your gains because the market is so volatile. That is a trader's, that's the advantage of the trader and the small guy, to be able to go in and out the market. And so that is a real big aspect of what we're looking at when we're doing the trading. So I do something called community trading, and this is, having the amount of information coming in. In the stock market, there's there's a minimum of 16,000, stocks on the stock market. In crypto, you have about 500 that has volume. There's 6,000 plus cryptos out there, but there's about 500 that's moving every day. And then out of that, you have a top 100. So you can actually trade the top 100 coins, and you can actually narrow down to a top 10, and then you can narrow down to the top 5, where you can always be in a trade that has volatility, and there's an opportunity to generate income. All right. And so there's a couple of steps before you get into trading that, you have to, you should take. And I kind of have that in a 7-day strategy that I talk about. Of course, the seasonality, the psychology of trading, technical analysis and geopolitics, since crypto is a global currency, it matters what happens in different places in the world. It can impact the price, right? And so, no matter who's out there, what location that they're in, I think they have to go through these 7 steps to trade. And this is kind of a course that, I give away for free because I believe, information it should be shared. How to apply it, how to use it, that is that's what you get mentored and coaching on. But for first, day one, when you get into crypto trading, one of the things that you have to understand or have to learn is how do you acquire. If you're in United States, there's a different process in acquiring crypto than if you're in Africa. There's different process. So the first step that I help guys with is acquiring crypto. And in America, we're able to use Cash App, we're able to use Coinbase, we're able to use ATMs. We're also able to use OTCs. Inside the DCG Mastermind group that I have, OTC is over the counter, right? And then the traditional ways is going through a regulated exchange. That is the first step for anyone that wants to get into crypto, right? Whether you have a mobile phone, there's sources like crypto.com. There's sources like, in some places there was local Bitcoin or Bitcoin Cash. There were ATMs. That is the challenge for a person to enter into crypto based on where they're at in the world. Is how do they get it? Once they get crypto, you have a wallet. That is, step one. And then step two is understanding that in the traditional markets, you would have, New York Stock Exchange. In crypto, we look at CoinMarketCap. Right, CoinMarketCap is, for this demonstration, it gives us a lot of information. So I'm going to stop sharing it and try to share it again. See if you guys can see my screen. All right. So CoinMarketCap is, really the list of, it lists, the cryptocurrencies by market capitalization. You're able to tell a lot about a crypto. And normally if a cryptocurrency is not on CoinMarketCap or CoinGecko, which is another site that basically gives you information on the cryptocurrencies, it gives you the basic information. So for instance, waves, we'll just go to one right now that's actually moving. You should be able to see a website. You should be able to see the historical data. You have a circulating supply. You have the volume. You have, the entire market cap of one of its pairs, which is Bitcoin. You have a chart here that basically gives you, it allows you to see, one, what is the Waves platform about? What is this cryptocurrency about? It also gives you where it's being sold. So the market pairs on CoinMarketCap, it allows you to identify the different sources and the prices that's being sold on. So this is an exchange. Binance, Yobit, Upbit, these are all exchanges. And, based on where you're at in the world, some of these exchanges are available where you are able to buy crypto, right? Once you buy crypto, and actually this presentation I'm going to have, it is available to you guys if you sign up for DCG Mastermind. The entire course, day 1 through day 7, is here. So DCG Mastermind, it's a free. You can download the same exact booklet that I'm walking through right now. So you can download the workbook that we're going over. And so the first thing that you want to do is, one thing about crypto is no matter what questions you have, the answers can be found, whether on the internet, but on the trading side, I believe traders now, especially in crypto, should trade in a community. Community trading is important because there's so many scams. There's so many, there's so many new things that are coming out in crypto. Where you have a traditional market that's been around for 100, 200 years. In crypto, everything is new. So trading in a community is really important for the new trader because you don't know what you don't know and you only have 2 eyes and 2 ears. And there's a huge market. And so for one, you want to be able to have a sounding board. Watching videos on YouTube in crypto or doing a search on Google, things happen in real time. In crypto, 2-3 months is a long time. A lot could have changed. Last year, we weren't trading DeFi as much as we're trading it now. And DeFi is new. And now we have NFT tokens that we'll be trading. So the amount of the speed of how the landscape is changing, it is important to trade. If you're going to be a trader, to trade within a community. And that is something that, these questions on an ongoing basis, to be a good trader, you can't sit on your thumbs with one strategy. It's a constantly moving market and there's a huge opportunity. 3 months ago, 5% was a good trade. If you made 5%, now we've seen 200% gains, 500% gains, 1,000% gains with DeFi in the last couple of weeks. As a trader, we take advantage of the opportunities that the market presents. So going through, understanding the total coin market cap, understanding the different market and exchanges that you can use based on where you're at. It is great to have a global network because there's exchanges that come up in different areas that offer different advantages of using them. And having a think tank where you can actually exchange the information and exchange the questions that you have. Coin market cap and arbitrage is also another part of trading. Historical price and circulating supply is huge because it determines how much it takes to move the market. So when we talk about circulating supply, you have a coin like Waves. It has 100 million coins, right, as a circulating supply. You have another coin like Euro Finance, and it has a 30,000 total supply, and circulating supply is up. Just if you go through historical data and you look at the growth, since August 13th, buying this coin at 5,000 or even 4,000, and coming, from August 13th to September 12th, whether you believe in the project or not, a 5,000 move to 36,000 or 40,000, that's $35,000 off of one coin in less than about 30 days, right? A little bit less than 30 days. And so the growth based on circulating supply, demand, depending on where you got in, this is tradable. Whether, I hear on the blockchain space, there's guys that say, hey, a lot of scams out there. There's a lot of, as a trader, if you're not long term and you're in and out the market, my average trade is 1 to 5 days, right? And that 1 to 5 days, sometimes I'm in for a couple hours and sometimes I'm in for a couple of days. But the ability for the average person with a cell phone and mobile phone, it makes trading crypto attractive because you have a market and, you have a growing market. So, this is exceptional. This is a high. Most people aren't talking about Euro Finance because the traditional person only knows Bitcoin. Bitcoin right now is, 10,000. Euro Finance is 3 times the price of Bitcoin. And so there's trading opportunities in this market that's outside of Bitcoin. There's coins that go from $1 to $2. That would be 100% profit, right? $1 to $2 would be 100% profit. For Bitcoin to give you 100%, it needs to go from 10,000 to 20,000, unless you're using leverage and margin trading. For this exercise, we're just going in through the class of trading and the steps. So CoinMarketCap, that is going to be, kind of the first place that you go to investigate the coins and see the circulating supply, certain things that's here. The next place, after you look at the total market cap, the historical price, the market exchange, and the volume and supply, is you can use tools to understand the charts. So, here's a traditional chart, right? It is going up and down. The price is here. The candlesticks are buyers and sellers. The green are buyers. The red is sellers. And traditionally, people have used charts. Well, you can go to a place like investing.com and you can look at the growth, and you can see, instead of using a chart to get the same information, let me go in and show you investing.com and show you the indicators. This is how trading has changed, where, even if you don't know how to read charts and you haven't studied them, you can go into a tool like investing.com as a website. It has a chart as well, but also has technical analysis already built in. So instead of you spending years to learn technical analysis, you can get the information just as fast with technology now. And so the thing is that the things that traditionally have been taught about trading, have changed. The technical analysis here is telling you on the hourly, the 15 minutes, it is a strong sell, right? 5 hours, on a daily, it's telling you it's a sell, and these are the indicators. So understanding what the indicators are, the RSI, the stop, you can Google that. You can see what it is. The moving averages is something I use when there's 10 sales signals and only 2 buys. It gives you a quick tip on whether the market is a bearish or bullish day. There is another aspect to trading where, I use to go through the market, and I forecast the market in advance, right? So on the 13th, we're waiting for a dip to buy. Sunday morning, normal Sundays, you buy the dip when Bitcoin is 2% down or more. I can actually go through the entire month in advance and kind of forecast the market based on, the normal psychology of the market. And so there's, it was that
Tom French here.
okay. Do I have a question out there? All right. So, this is one tool that is available here. So even now within the charts, we use TradingView because it's anywhere with internet connection. We can actually pull it up. But even here, the technical analysis have changed where you have analysis here as well. So without looking at the charts, some of the tools that are available tells you a buy or sell signal. To demystify trading, support and resistance is kind of drawn out. There's tools like volume monitors that monitors the volume, and it'll tell you if volume is coming in and out of certain coins. So if we're looking at Ethereum, right here, it tells me, how much volume is coming in and out. The net volume is negative. So I can see the market is dropping, and I can actually see the transactions on the blockchain, right? And so these are quick tools that give me an overview. There's a tool that gives me a confluence indicator. So, some of the Fibonacci's, you hear Fibonacci's, you hear Elliott waves, you hear these different strategies that will take you a year or 2 years to learn if you study on your own. There's now tools available that will give me the same. It shows me here is the support at 362. So if I'm looking at Ethereum and the market is going right now, I can go here to Ethereum. Historically, this is where the support is going to be. And so, drawing this down to a 1 hour chart, here's a line that's already kind of drawn here around 360, 362. The support levels of where to buy, and if we're looking to buy the dip, what area will we buy at, would be in this area here. And other guys are looking at charts, looking at the same thing. And so you see it's moving up here right on this same price. And here's the buy level, right? And now you see buyers coming in. So, using tools is something that I focus on in the mastermind on top of the community trading of why it's going down. We expected the market to dip down today. It's a Sunday morning, and that's part of our strategy. Having the report that we have, and we talk about the volume and sentiment and timing. Sunday mornings around this time is where you're going to see the volatility. Right? Tuesday nights around this time we'll see volatility. So every day, you can see sessions that are going to have strong trending candles. And so the amount of information that we have available, in the crypto market, it is, it gives us an advantage. The same thing we have here on this morning, as a trader, I can plan my life and I can trade based on schedules that I've noticed when more activity is in the crypto markets. All right, so going through and going through the understanding the charts. TradingView is a tool that I have new traders come in and learn about. The market tools. There's about 16 tools that I have here on this window, right? And each one of these tools gives me a just to see the overall market right now, right? In a week, it's been green. But if we go to the day in the last hour, so the day, you see which ones have been positive, waves, balance, BNB, having this available, it jumps out and it tells you which coins and which opportunities that you have right in the market. So to be a trader and get 1% or 2% a day, it's become more realistic for the average trader to be able to take advantage of things in the market. To watch the liquidity, to watch the volume. There's tools as well. BNB, here it stands out. Wave stands out. So it gives you, even in a red market, you're able to easily identify what's moving. All right. And then on the performance of volume, we use volume to see where the volume is coming in. And so going through some of the tools, this class is really for me to kind of expose guys to certain tools that are available that gives us a advantage in crypto, right? And so this volume monitor is based on Binance. Having a blockchain, you can actually see trading happen in real time, the amount of pings coming in. And then you can also have the same tool for Bittrex, right? You can have it for any exchange that you're trading on. And, the social sentiment in the stock market, to get a social sentiment feed to see what guys are talking about, what cryptos are having social news, right? So here it tells you right now, Waves is coin of the day. So it means that most people are talking about Waves and the price is going up. There's a social engagement, social volume score. This tool here is historically hedge funds and quants had information in the stock market of how to trade using certain tweets, searching certain tools. Now with being a crypto trader using technology, we're able to find a lot more information a lot faster. And so this Waves is here. The Waves is also on a volume. See it here, BNB dot. It gives the opportunity to get 1 or 2, 3%, on a daily basis, based on just the movement and being able to spot it early using some of the tools that we have. So, a social media tool as well. Coin Gossip lets us know what the internet, which sentiment. Sentiment is a big part of crypto trading because a lot of the projects are all based on future, speculation. And so that trading gives you an opportunity to make money and learn about the projects. I use TweetDeck a lot to get information faster because certain information isn't being able to write about. So I can see in real time what guys are talking about. And I'm showing you the tools because these are tools now that allows the average trader to have access to it, where historically, we haven't had access to the information, and information without paying a lot. A lot of these tools I'm showing is free tools, right? It doesn't cost you a lot to get into crypto, right? There's no barrier. So to get into trading in the traditional markets, you may have had to have $10,000 or $1,000 here with your mobile phone. And this is what makes the market so great, where we have the average person that's able to create a market. One of the things I do, I'm a swing trader. Day trading is trading in and out, by minute. I'm able to trade the markets using swing trading. So I cater to guys that, want to live their life. They want to be able to go out and, trade into a trade 1 or 2, 3 days or 1 or 2, 3 weeks out. And people have a preconceived notion of trading where you think you're in front of your screen all day trading. I teach, market cycles knowing that, hey, there's certain parts of the week, certain parts of the month, you could be in and out the market. And so even within this, for our September report, and I have a swing trading target. This is already kind of predefined. BNB was the coins that we wanted to trade during this time, DCR, comp. We can forecast it. The days that we wanted to trade from September 9th to the 12th. So yesterday, the market was good. And we wanted to get out of the market because we had a predictable period. September 9th to the 24th is predictable bearish period. 24th to 28th is a bullish area. So, being able to forecast the markets and have idea when we want to trade as a swing trader, we don't have to trade all month. We can pick out different days that we want to trade. There are certain calendars, there's certain information that historically, if I'm gonna pull up a calendar, historically for the stock market, these periods from the 21st to the 24th has been bearish, meaning that the market has dropped. Funds have come out of the market. And this is in historical the stock market. Well, as a global currency, Bitcoin and cryptocurrency, there's times in a month where money comes out of crypto as well. And it may not, if the stock market is having a big drop, you'll see guys take profits out of crypto. And that's part of the psychology of trading. So it's not that it's the same markets, but there is a cause and effect. Money is coming out of traditional markets. It's going to impact crypto at some point because of psychology. They have gains in crypto and the stock market is going down, or if the stock market is going up, crypto sometimes slows down. And so knowing these patterns allows us to kind of trade the markets, knowing what's coming up. Some of these dates, we use calendars. So CoinMarketCal is another for crypto. A lot of the dates and a lot of things are posted in the future. So we'll, part of our 7-day challenge is to go through the markets and look at the cycles and use the calendar to see what's coming out, 2 to 3 weeks out. So here you can go by last added. We can search what's coming out in October. You buy something that's coming out in October that's on the calendar, there is opportunity to get 2, 10, 20% based on sentiment and based on speculation, right? So Yearn Finance has a listing coming up on the 14th, right? But if we knew that 3 weeks ago, you buy it 3 weeks prior, and then you're basically going to buy you buy into the news, and then you sell it before it happens. And that allows you to get the gain in between. All right. So going out right now, we're looking at September 14th. We go out to like September 20th, or 28th, go further out into the month. And we look at something like NWC that had a wallet, supposed to come out, September 25th per se. And say you bought it in August, right? Because NWC was a coin that we bought in August. And if we look at the growth that it's had since August, it gives you an idea of the charts. So knowing that it had a date here, we bought it in August around this price. It was at 6 cents. Now today is at 24 cents. Right? So that's a 400% gain just by going through, as a swing trader, not a day trader, not sitting in front of the computer, but using the stock trader almanac, using the calendar, to look 1 to 4 weeks out. And this is how I swing trade. This is what we do in the mastermind. And it's really for busy, entrepreneurs. So anyone can become a trader. Technical analysis is a day trader that's going in and out. A fundamental trader uses the news, uses future events to plan out their trades. And so using the fundamentals that we have. Now, the alligator strategy is a strategy that looks for trends, right? And so we can put that same coin in NWC. This is the alligator strategy that I teach, which uses moving averages. If you look at it on a 1 day, as it came out the water at 4 cents or 6 cents, it's been trending up ever since. Even though the trend is still in place. And this is what the alligator strategy that, we teach in DCG in the mastermind. This is what it's about, is basically being able to follow the trends over a period of time. So since August 10th to now, it's had a 400% gain, and the trend has still been intact. And so that is a big part of the alligator strategy that I teach and I give away, right? And it's focused on moving averages, right? So if we look at the same moving averages that we have here, these lines are moving averages. We come here and I teach you how to use TradingView, and we look at the moving averages on a 1 day or in a 1 week, and it tells you for this coin it's all a buy, right? So if you have 9 buys and 1 sell, and overall it is 12, it's a buy. It keeps you in the trade a lot longer, right? And it keeps you in the trade a lot longer. So now you're not day trading in and out, trying to time the market. You have timing in the market and you're following the trend. So the year to date, this is up 1,000%, right? 6 months is 1,100. The last 1 month, it's up 18%. 3 months is up over 700%. So taking a small amount of money in crypto, learning how to swing trade with the strategies that we're in, we don't have to be a day trader, and we still have as much gains, and we save time. Time in crypto and the right method to trade it. There's certain coins that is going to give you a higher return. So, this alligator, if you wanted to be a day trader, you can actually trade it on the 15 minutes, the strategy that we teach. It'll tell you that it was a sell signal here. You short it right here at this line, and the market went down. And that's on a 15-minute time frame. You change it to an hour. This is a chart, and it's showing you that it's downtrending right now. And here's a support level. So being able to learn, I think that's the critical aspect of trading, is that most people jump into trading and they want to see profits before they get educated. The education precedes profits, because this is a life skill. And trading has been around since the beginning of time. Before we had trading, people bartered. That's a form of trading. The indicators that we have, the technology that we have, it actually gives us a huge advantage. During COVID, when the entire world shut down, and people were stuck at home, we had the best trading environment, in the last 2 years. There was money being made in the markets, even though the entire economy was crashing. There was money to be made in the markets. So using the fear and greed index, a buyer's checklist, I provide that in this this 7-step process. So there is a buyer checklist. The fear and greed index is also a tool that basically measures the psychology of the market, at the time. And so it'll tell you that the fear index last week, there was a lot of, there was some greed last month, and now guys are starting to get fearful, but it's also due to the time of September. So just in September, normally there's a pullback in the market, and there's a pullback, but it gives us opportunity going into November and December. So if you missed the buying in July and August, you look at September and October as a time. You look at August as a time to sell at the highs, and then you look at September and October as a time to buy good projects that are down going into November and December. And so there's certain cycles that we can forecast in the market that repeats. So a fear and greed index is another tool. And so there's a lot of tools that are available that historically, and they're free. So to become a profitable trader is really applying the information that's out there and the right information that traders are using. All right. The stop limits and stop orders, there's a lot of things in DeFi. They're centralized exchanges and they're decentralized exchanges. Binance would be considered a centralized exchange, right? It has a infrastructure that you have to get KYC. You have to, you have to create an account, and there's also a decentralized exchange like Uniswap, right, where you basically connect your wallet and you're able to trade, in a decentralized environment with no KYC, no AML, and you're able to purchase in a decentralized environment. The DeFi environment has grown to the point where it's overtaking Binance as a volume. So the simple site here is giving the world ability to buy and trade without using a centralized exchange. And so, of course, there is risk in trading. The market goes up and down, but that's where the education it doesn't take a lot of money to get into trading, but having the right information is critical than having the right amount of money. You can't throw money at something that you don't understand. So, the questions that you ask and the obstacles that you run into, you want to have an environment where you can get confirmation. Plan to buy on down days. Everyone talks about buying low, selling high. Well, when it comes to trading, the emotional aspect of some traders, they only like to buy when it's selling is low, and that's why they lose money. So the plan to buy on the down days, having that guidance where we're looking at our report and, we Sunday being down and we anticipate today on the 13th, it's a day for us to buy the dip. So buy Sunday down. And 32% down. So right now we can look at market cap and we can see how much crypto is down. All right. We can see at Bitcoin and we can see if it's hit our target. Go here to coin market cap. Let's see the Bitcoin screen here. So right here is about 1.5% down, Bitcoin. And, if it goes down a little bit more at 10.2, that would have been probably 2%. And then that's the area that we wanted to buy. Going in through the rest of the month, we have the rest of the month planned out. Right? And then we also have it for the stock market. So this is the difference between a fundamental trader and a technical analysis. There is a different type of trader. There's a day trader. There's a swing trader. And swing trader, there's benefits, right? Over a period of time, you have more time to trade. You have more times to be right or wrong. The market goes up and down. So you can buy and anticipate it going down. You sell when it goes up, and that's a part of a swing trade. That being said, I know that I have a certain amount of time that I was going to present. Let me know if there's any questions out there on the type of trading or any questions. So I see the chat in here. So which crypto you focus on for your trades? I focus on what's moving. So a lot of times I will come for my trading specifically, I trade what's trending up. So like Flex coin right now would be a target. I don't fall in love with a coin because I focus on trends. So if I look at Flex coin, FXC, on a trend, it changes. Traditional investors, they trade based on, they may have read an article and think it's good. I look at the trend, and based on my indicators, Flex coin would be a trade. So, coming here, sorry, I wasn't sharing the screen. So I'll come here, I would do a sort. I would see what's moving on a day. And depending on how long I was in, I would see Flex coin that's moving on a 1 hour, the 1 day, the 7 day, and the 1 month. To me, that is a trending coin. And so that's the one I would trade. I mean, it's that simple. You see, Idea Chain coin is trending up the last 1 day, 7 days. It makes it easy to take advantage of the market. And so when you look at Flex coin, you see the trend moving up. This is where I like to trade. And it gives us an advantage to be able to make money out of the market. Okay. We have access to these trading tips. Yeah, so if you want access to these trading tips in this presentation, you can go to dcgmastermind.com. You'll have a free account. And you'll see in the topics, there's a 7 steps in crypto, a challenge. I have a video for each one of the areas. You can download the workbook. You take the challenge. Okay. And then it said a little blood on the street. Yeah, it's a little blood on the streets. So there's not blood on the streets. It's the market goes up and down, and it's pretty. People got to sell at some point. Guys that are holders, they expect just to hold it forever, and the market goes up. But you can actually benefit off of trading when the market is up and down. That creates opportunity for guys to sell and rebuy. So that's awesome, right? Do you have any more questions there? So I have 3 minutes left. Any questions that are out there? So when there's a pullback, do you move the fiat? Yeah, so stable coins, right? There is a stable coin index as well. So the stable coin index I also use it for trading, and it'll allow me to see if money is being pulled out. But if you sell into Ethereum or you sell into Bitcoin and you anticipate the market moving down, you can move into the stable coin, and this way you're able to buy more and accumulate more Ethereum or more Bitcoin or whatever coin it is in your choice. Moving into stable coin is to minimize the volatility. And yeah, I personally trade the USDT pairs unless I'm buying decentralized exchange, whereas I still can actually buy my Bitcoin or Ethereum and I can move it into a stable coin. So yes, I mean, people think that, it's volatile, the market moves up and down. You can actually just move it into a stable coin and sit side. And it's about who you know, DCG. Education before profits. It's better to be aware. Guys jump into trading and they follow someone else and they never understand the fundamentals. Yeah, so in here, I think the session will be available. If not, this course will be inside DCG Mastermind. And you guys will have access to it. Just a free account. And there's a lot of information inside the Mastermind network. All right, cool. So, yeah, you guys could have had me on yesterday. All right. So, with that being said, you can move to USDT, BUSD, or USDC. There's
thanks a lot. Are there any more questions from the audience? Does anyone have a question? Remember, you can ask questions on the audience, or you can raise your hand to ask a question. They will have to
Okay.
ask a question on that. Is there any question?
And I'd like to thank Faith and Daisy. They both invited me. They're inside the mastermind. And, this is an awesome time for us to take advantage of the market.
Are you seeing some of the questions on the chat?
Uh-huh. Yeah, so I'm seeing one that says, when does it make sense to hold a crypto? Based on the project, it's all speculation, it's all sentiment, right? And so anytime that you buy a crypto, you expect it to go up. But if they have news and they have a event, it's good to hold long term. But long term as a trader, we look at long term as a month or a couple of months. We can't forecast what's going to happen a year now. We can't forecast, if the government changes its stance. So in the meantime, there's opportunities to make money. It's all an investment, right? You could have held Amazon, or you also could have held other companies that went out of business. So there's a risk involved with holding long term because you can't forecast the future. Now, for us that are blockchain enthusiasts and we believe in crypto, we're committed to helping the community grow. So we're holding, and a lot of us would hold to zero, right? Because we really believe in our heart that blockchain and Bitcoin is the future. But there's a lot of projects that, there could be an argument with inside the community and it splits. And you could be holding the wrong coin. So I always tell guys it's better to trade and to accumulate as you trade, but there's gains that can be made within a month, within a week, and you can reinvest. But it's proper risk management. I wouldn't put all my eggs in one basket, even the US dollar. How long do we think it's going to be around? It's always been here for the last 100 years. But it also things can change. Right? Things can always change. So that is, we manage our risks in trading. Right? Yeah, is that Exodus is
All
a
right.
wallet provider. All right, thank you guys for having me. All right, I see you guys here talking in the background. Thank you guys for having me. I'm honored to be here.
Uh, all right, James, I think we can end the session now. And everyone is invited to join us in the DCG group. And I hope we'll get some discount considering that we are coming from an economically disadvantaged region of the world where you have to encourage a lot of people to pay for quality content. Are you planning to offer us any kind of discount so that we'll just our community members will take advantage of that immediately?
Yeah, I give quality content for free in the DCG Mastermind. I mean, it is. We only have two programs. It is a free come into our network, and it's paid to be a part of the mastermind. And that's I feel you give value, you give what you can for free, and guys pay for what they value. So it's free. The course that I just went over, there's no charge for that. But to be inside our mastermind network, it is a fee that we have. Our relationships are all valuable in the time. But any information you guys have,
okay,
just ask me out, and I'll give it to you freely.
Okay, thank you so much. We're glad to have you, and we'll constantly keep in touch with you. Thank you.
Cool.
So
You.
just end the session now.
All right.
All right.
Trying to exit. I think you have to exit. You have to end me out.
Yeah, I've done that. Yeah, I've done that. Hello?
Now let me there.
Where is Peculiar? Don't worry, don't worry. I'm inviting him back. Peculiar, where did you go now?
Yeah, I think I got kicked out or something. I don't know.
Okay, it's because this session is reading Bolaji's. We're supposed to be doing the central bank digital currency stuff, but we want to step it down so that you two can run through yours. That's why you were kicked out, because we are not supposed to be here at this time. So you can go ahead and begin to present now. Ladies and gentlemen, please, we made some adjustments on our program because of the time difference between one of our presenters. So we want to make sure that his time corresponds to when we gave him. So we'll be taking a look at decentralized web, all these things that we are talking about, blockchain, cryptocurrencies, and digital financial assets. They have their roots and the origin in the decentralized web technology that dates far beyond when most of us probably may not be able to understand. And in this presentation by Peculiar, he'll be taking a look at interplanetary file systems. Why the second presentation will be by Matthew Zipkin, and he will be taking a look at Handshake. These are all decentralized web application technologies that we need to understand as we play along in the industry. All right, so the ball is in your court, Peculiar. Thank you.
All right, thank you for the opportunity, Mr. Truth, and thank you everyone for having me. So I'm gonna go on and share my screen. Okay, let me know if you guys can see my screen. Can you guys see my screen? So, okay, perfect. All right. So this section, this is a workshop on the decentralized web, and we're going to be talking about two different things. Matthew will be talking about Handshake. I'll be talking about interplanetary file system, which is IPFS for short. And so this is about me. Currently, I consult companies on who are exploring blockchain. The lead blockchain architect at Delta Stack. I'm an independent blockchain consultant at Next Futurist Group, and I'm currently the blockchain engineer at Unocard Financial. And okay, so we are going to talk about, we can't talk about the decentralized web without looking at the centralized web. So throughout this conference, we have been talking about DeFi, we have been talking about CeFi, but most of those internet protocols, most of those architectures, they all leverage on something, which is actually the web. They're all built on top of the web. And that is what we are going to be exploring here. And so we are going to take a look at the centralized web, and we're going to take a look at the decentralized web. And I'm going to make this comparison based on how each of them store data. And there's a lot of differences, a lot of comparisons. But as we are pivoting into the decentralized web, we need to know all about it. Okay, so decentralized web. What is the centralized web? So, like I said, I'm making this comparison based on how we access data. So, the centralized web has, I'm comparing this based on two things, which is location addressing with URLs and the trust and efficiency on the centralized web. So, in the centralized web, we have something we call the URLs, and this URLs does something for us. It helps us to know the location of a data. It's called uniform resource locators, and enables us to know where a data is stored, not actually what that location is storing, but actually what the data is storing. For example, if you look at this URL that says HTTPS cute kitties, from looking at this URL, you could be able to predict or assume that by clicking this URL, you'll be able to see a photo of an adorable cat. But when it comes to the web we currently are accustomed to, that is not always the case. You could be expecting to see this, but you could get to see this. That is a monkey laughing at you for, yeah. So why is that so? Because since the centralized web uses what we call uniform resource location, we actually see the URLs, but we don't know what is in that particular file, what is in that particular location. This could be a virus, this could be a malware, this could be anything. But from the name, you were able to say, hey, I trust this. I trust what I'm about to see. You have a perception of what you are about to see, but it's not always the case. And taking this further, we could actually malicious hackers can, or malicious users can actually make this or trick people using this same kind of method. So for example, we can assume that a file hosted at cutekitties.com is safer to open than one hosted at evilhacker.com. But in reality, evil hacker could be safer, in the sense that you could expect what's hosted on this cutekitties.com to be very, very safe based on the name. You're comfortable, you trust the name. But on clicking that URL, you're actually downloading a ransomware or you're downloading a malware. And while clicking the opposite that you presume that is not safe is actually safer than the website that you presume that is safe. Another thing about the centralized web is the trust, how we trust in the centralized web and the efficiency of the centralized web. Like I was giving an example, you trust based on looking at the URLs or looking at the name, and you presume I'm comfortable with this name, so I get to trust. But you could get tricked by malicious actors. And also, when it comes to efficiency, how many of you, when you are downloading a file, you could end up downloading the same file twice, or downloading the same file 100 times, or even in the entire internet, 5,000 people could have the same file and all of them stored differently. And that leads to a lot of redundancies. And so there has to be something better, right? Well, let's explore the decentralized web. So in the decentralized web, we host each other's data with a different kind of linking that it's much more secure. So as opposed to location addressing, which is using the URL to know the location of the file, we use what we call a content-based addressing. And what is a content-based addressing? A content-based addressing is a product of cryptographic hashing. When it comes to the decentralized web, when it comes to decentralization, be it Bitcoin, Ethereum, Hyperledger, whatsoever it is, you cannot talk about decentralization without talking about cryptography, or without talking about cryptographic hashing and how all those would fit into the puzzle or fit into the picture to make them what it is. So it's a product of cryptographic hashing that liberates us from reliance on central authorities and enables us to trust information that is shared. A hash is a string of characters that look like a password to the Pentagon. Or I could say a hash is a string of characters that look like the password to Trump's nuclear weapon, if you get the joke. But you can think of it as a unique name for data. For example, a hash could look something like this. It could also look something like this. You take a raw data, like you put a rhino, you hash it, you get something like this. You put a string of words, you hash it, you get something different. You change the words, you hash it, you get entirely something different. You change something else, hash it in that same order, which means they are very, very unique. Any slight change means a new hash is generated and a new entity or a different kind of data that you're requesting to see. So when it comes to content-based addressing, we know that the name is not very descriptive, in the sense that comparing it to the name adorable cat.jpg.jpeg that we saw before is much more descriptive, but it's not very, very secure. But but using cryptographic hashing is more secure, and here are the reasons. Cryptographic hashes can be derived from the content of the data itself, like I said, which means any change, anything, you get something unique. by comparing the hashes, that there are two different, meaning that anyone using the same algorithm on the same data will arrive at the same hash. If Adan both using the same decentralized web protocol, such as IPFS, to share the exact of a kitten, both images will have the exact same hash. In the opposite, hashes are also unique. So if Grace uses Photoshop or uses anything to change, be it a pixel or be it a whisker, or to change the color of the eyes of the cat, which means a new hash is generated, as we saw in this example. Any new change means a new hash. Any new change, any different thing, a different hash. So how do we trust, and how is efficiency handled on the decentralized web? So on the decentralized web, though we pitch in and host each other's files, and content addressing enables us to trust the information that is shared. We might not know much about the pairs who are hosting the data, but the hashes can prevent malicious actors from deceiving us about the content of the files. That makes cryptographic hashing so important to the decentralized web. So let me explain this. So we in blockchain, in crypto, we always go with verify, don't trust. That also applies in the aspect of the decentralized web, because they're all byproducts of cryptographic hash functions. So in the decentralized web, we all share, or we all host each other's data. For example, I have a picture of a cat, someone is looking for it. Someone uses the types the name, or based on wants to search for whatever picture it is, and then searches from the name, it gets hashed. Charges from the data, it gets hashed, and then from the nearest pair, it shows the data to that person. So the centralized web works differently. Once a particular photo of an adorable pet, we ask for it by its content address. Who do we ask? The entire network, basically. If Ada is online, if James is online, if Bio is online, think of hash as a link, not just the name. So I decided to highlight that, so we don't get a misconception about what a hash is, and compare it to the name. So more into cryptographic hashing, we are going to have a deep dive into it. I'm going to skip some things based on the timing that I have, but I'll talk about the necessities. So for cryptographic hashing to work, we need to know what data formats we are working with and use the appropriate tool. And for example, I'm trying to find the picture of a cat, I'm trying to find the picture of, I'm trying to find the video, I'm trying to find any of the pairs who have either my bank certificate or anything. I can store it anywhere, or whoever decides to store that data for me. So we use something we call content identifier, and which is called CIDs. CID with SCIDs is a particular form of content addressing used on the decentralized web. The particular content identifier we are talking about is, for now, it was developed by IPFS. So every protocol have their various content identifier. We'll talk about this more later. A CID is a single identifier that contains both a cryptographic hash and a codec, which holds information about how to interpret that data. Codecs encodes and decodes the data in certain formats based on how we make our CID, that's to function. CIDs allow us to build data structures that link to other data structures completely from different formats. I think maybe when you see my slide, you read this. Macro trees. You cannot talk about the decentralized web, you can't talk about cryptography without talking about a macro tree. A macro tree is a data structure in which every node is hashed. But in the case of decentralized web, and in the case of data storage, every single file that has a parent, once any parent change or any child changes, a new hash is generated in that same process and in that same manner. So okay, we jump to interplanetary file system. So I would try to make notice that there are many formats and there are many protocols to use content addressing that already use content addressing already. Uh, uh, and one of those are Git, which is a format that uses content addressing. And we also have protocols like Bitcoin and Ethereum. And the only major difference in this from IPFS, which is our main target, is how they interpret the data and which cryptographic function they use for hashing. So all of them use content addressing, depends on how they variously implement them. So we look at the interplanetary file system, which is our main focus, and what does this bring into the table for us? So IPFS, the interplanetary file system, is a peer-to-peer network protocol used to share data on the decentralized web. As the name suggests, think of it as a file system, and it has some unique characteristics that make it ideal and safe for decentralized sharing. So sharing and storing and sharing data on IPFS, you could picture it this way. So everybody on the IPFS network, or anybody that I don't want to get okay. So to get into the IPFS network, you need to run a node. That is, you could run IPFS, install it on your computer, install it on your machine, in the cloud, anywhere. You are known as a node, and which means any data you store or you're sharing, others or other pairs have access to them, in which someone can request for that data. It goes from your node, picks that data, and shows the person. Same way and same process. Let's say you are requesting for a data, it goes to the nearest pair, or it goes to whoever has that data, or whoever is online, picks that data that you're requesting and show it to the person. The data could be a picture, an adorable cat video, whatsoever. So IPFS, the interplanetary file system, are content addressed and immutable, which means you can't edit files. Instead, a new file is created for every change. As we explored earlier, change a whisker, a new file is generated. Change anything, a new cryptographic hash is generated. So one thing I particularly love about IPFS is that IPFS made it to built into IPFS that lets you treat files like you normally do. For example, you want to rename a file, you rename it in that same process, that same user experience. It made it so much easier and so much flexible. Like from your laptop, you could have a document file, you want to rename it to a JPG or a TXT. You could do that same way using IPFS, but on the ground, on the background, a new cryptographic hash is generated. But to you, it makes that complexity hidden from you so you don't need to, makes it ideal for you, and you think it's mutable, but it's immutable. So what are the use cases of IPFS? So I would like to show some examples about this web hosting of blogs. I don't know how long I have, but okay. So you could host a website on IPFS. So for example, about that, let me show an example about that. So there's a particular, so this is a particular tool, flick.co, which have services. Can you all see my screen? Okay, sure, I'll share my slide. So we have flick.co. So flick.co is a software as a service that, anyway, while it loads. So we could host websites and blogs on the IPFS network. We could store blockchain data. For example, in Remix or in the Ethereum blockchain. Previously in 2017, that was how we went about storing data on DeFi. For example, let's say you are building a decentralized escrow system or a decentralized marketplace. The information, the pictures, the data, everything, we normally use IPFS for those. We hash those contents, put it on IPFS, fetch those data directly. Because if we hash those and put it on a blockchain, we are going to be paying so much gas price for storing that information on the blockchain. And for our users to retrieve such, same is a very bad experience. So IPFS came to save the day. And We also have various implementations. We have Swarm, we have Sia, and so on. So storing data, you could store your adorable cat pictures on IPFS and so much more. So what makes IPFS unique? What makes the decentralized web unique? So the decentralized web supports a more resilient internet, which means your website, your application, your web app, be it you're running Binance.com or you're running any big enterprise application like the Blockchain Nigeria user group website, you could have those contents on IPFS, which means it's nearly as impossible to take it down. I would just say impossible, because let's say someone attacks your website and then or let's say an engineer in your company makes a mistake that makes your entire servers to catch on fire. You can still get the same web page from another different source. So let's say a different pair has that same data. You just say, hey, I mistakenly burnt my file. Can I get this data from you? And so on and so forth. It makes it harder to censor content, because files on IPFS come from places it's harder for anyone to block things. For example, here is more realistic historical examples. In 2017, Turkey blocked the popular website Wikipedia, and Spain blocked access to the Catalonian independence. Just like China has their firewall to block some certain websites like Facebook and so on, censoring content, IPFS improves these actions when these things happen. So it's much more resilient to take down when you have your application or your website stored or running on IPFS. The speed of your system or the speed at which you get data is incredibly faster running from IPFS. There's something we call latency, and when you come into the web development angle, what's the name again? It skipped my mind, but it's latency in the sense that you could be from a different country asking for a website or asking for a data from a centralized server that is in the other parts of the world. For example, I'm in Nigeria requesting data from, let's say, China or from Russia. This traveling from there, getting my file for me to see will actually take time, which makes the website load more slowly. But if this is on IPFS, it goes to the nearest peer who has this information, who is online. Take this information and show whoever is requesting for that data or that information. As simple as that. It makes it very much easy, and it makes it faster to run store that on IPFS. So this is an example of a product that enables you host your blogs or host storage on IPFS, and that is flick.co. They have some very good pricings, and you could also host your own blog if you don't need to go through this or you don't want to pay for any of this. You could have the option of installing IPFS on your application and then hosting your service personally by yourself, hosting your website on IPFS by yourself. For example, we have a blog from one of the Bitcoin Cash engineers that is running on IPFS. I remember his name. Okay, yes. So that is Christian Trotz or Tron or something. So from his website, he shows you, or he tells you immediately that you are running on he calls it Unstoppable Blog on censorable content. He runs his website on IPFS. And so another example of this is in your Brave browser, you have an IPFS gateway already. I don't know if the version changed. For example, here I could decide to connect my IPFS, show my peers. So this is IPFS running on my tab. So there are various utilities and applications of IPFS, like Remix. It's actually going very, very trendy, and it has helped us in a lot of ways, like publishing things, publishing contracts, storing data, and so much more. So I think that is the end of what I have to talk about. I don't have time to go into much more technical details. So any questions for me? IPFS digital or online wallet? Okay, so IPFS, I didn't get your question. Is IPFS digital or an online wallet? Okay, IPFS is not a wallet. IPFS is actually a decentralized file storage system. So it enables you to store various things there. You could actually, if you want, you could actually hash your mnemonic and store it on IPFS. Is this the same as unstoppable domain? So I think Matthew will make more insights on unstoppable domains because it's relating to his field on where he's going to talk to us about. That is the domain name system, the DNS. Okay. Can you share your slide? Sure, I will definitely do. Any more questions? Okay, sure. It's all about the slides. I will definitely do that. So, any other questions for me?
They can always
If so,
drop their information.
okay,
Drop your
sure.
information so that I'll share you your contact, all your contacts, so that people can contact you.
Okay, sure, I'll do that. So over to you, Matthew.
Matthew.
Okay, great. Thank you. Can everybody see my screen and hear me okay?
Yes.
You're okay.
Okay, great. Thank you. I'm going to start by pasting all these links in the chat here too. So I'm going to talk to you about. I'm going to start. Okay, so this is. I'm going to compress this talk. I've given it a bunch of times, and there's some videos about it already. And since I have limited time today, I'm going to try to kind of rush through my slides, and hopefully I can give you guys an interesting demonstration about Handshake. So Handshake, ticker symbol is HNS. It is a separate blockchain. It is based on Bitcoin. So it is a UTXO-based blockchain with transactions like that. And it is a decentralized root zone and certificate authority secured by proof of work. So what we're going to talk about is DNS, how names work on the internet, and how SSL works, how you can connect to websites securely, and how we're going to take those roots of trust away from central authorities and secure them by proof of work, which as Bitcoin users is something we might all be a little bit more comfortable with. So I'm going to start off by talking about DNS really quickly. We probably all know that DNS is where you take a URL like bitcoin.com and it turns into an IP address. Turns out this URL is actually split into different sections based on those dots. And each of these dots is a label or a domain. And the root zone is an invisible name at the end. So when we're looking at www.bitcoin.com that dot represents the root zone. When you make a DNS query from your computer, you actually send messages to each one of these servers in order, asking, I'll just kind of run this like a couple times. So this happens if you're going to www.bitcoin.com, you actually ask the root zone first, and then you go to .com, and then Bitcoin, and then www, and this stuff can be easily looked up. So you can get the idea that the structure of DNS is like this pyramid where there's a root zone at the top that has top-level domains, com, org, net, info. There's a few hundred now. And then each of these top-level domains has their own subdomains, second-level domains like Google, Facebook, Bitcoin, AirMeet, like that. And then each of those second-level domains like Google can have even further subdomains. And these are all separated by dots. And to discover them online, your computer has to sort of query each of these servers one at a time and get an IP address for the next server until it has found the entire, until it's found the website at www.bitcoin.com. So the root zone is managed by a nonprofit organization called the Internet Corporation for Assigned Names and Numbers, also known as ICANN. They're based in Los Angeles in the United States, in California. And so the root zone is a collection of records that represent, .com, .org, like that. And those records are all signed by ICANN. That's how you know that they are authentic. I can't play this video because of how I'm presenting it, but they have this amusing ceremony every couple of years where the staff gets together in the basement and they unlock special equipment from a safe and generate a private key that is used to sign the root zone. And then that public key is everywhere on the internet. You can Google it, KSK 2017. It's a public key that every computer, when you buy it, every computer has it installed. You implicitly trust it. And so in that way, ICANN signs a zone, a series of records that says here's where COM is and organ info. And then COM has its own public key. And they say, well, this is where Bitcoin is and Google.com and Facebook.com and Airmeet.com. And then Bitcoin has another key. It says this is where www is, this is where mail.bitcoin.com is, and like that. And so there's this chain of signatures, and it all leads up to the ICANN root zone key, which is generated in this basement in California every couple of years. So clearly, central authority, one single private key that basically secures the entire internet. Second topic is certificate authority. So this is actually different, but when you see the lock icon in your browser, that's telling you that your browser has established an encrypted connection with the web server and has also authenticated that you are talking to Bitcoin.com, definitely for sure. And how this is a separate actual chain of trust. And I've taken a screenshot here of going to Bitcoin.com, and you can see I've received an SSL certificate from the website that was signed by Cloudflare, which was signed by Baltimore Cyber Trust Root. Now, probably nobody in this chat, we got 55 people, I'm willing to bet nobody has heard of Baltimore Cyber Trust Root before. But if you go into your system settings and look at your certificates, this kind of list here, you'll see it in there along with hundreds of others. And these are all public keys that your operating system just trusts. When you bought a new computer, these keys were on there. So again, we're cryptocurrency users. We have an operating system that just trusts keys that belong to Baltimore Cyber Trust. Okay, and then because Baltimore Cyber Trust trusts Cloudflare and Cloudflare trusts Bitcoin.com, however they arrange that, when you go to Bitcoin.com, your browser says, okay, this is an encrypted connection. So there's these two chains of trust. There's DNS, secured by DNSSEC. DNS is where you put in a name like www.bitcoin.com. Each of those labels has its own public key signed by the parent, and the last parent is signed by ICANN, the root zone. And then over here, we got certificate authority, and it's the same kind of thing. You get a public key from the web server. That key is signed by some authority, which is signed by some other authority, which is finally signed by some authority that's just installed on your computer. So as Bitcoiners or other cryptocurrency users, we look at these two roots of trust and we say, we know we can do better. We can replace them both with proof of work. And that's what the problem that handshake solves. We're going to take that power away from these central authorities and distribute it. So HNS, a handshake query, works basically the same way as before. If you're looking at a website like bitcoin.proofofconcept. So in this case, proof of concept is the top level domain. It's a handshake domain. You can't access it without special software. It's not in the legacy internet. But it works the same way. The root zone is on the blockchain now. So we're not talking about a root zone signed by a bunch of nerds in the basement in California. Every couple of years, we're talking about a blockchain. Proof of concept is a top-level domain. The data for that name is on the blockchain. Also, with a handshake resolver, you can still access ICANN. It's not either or. They are both accessible with the same software. And how that works basically is if you ask your handshake resolver for a name that doesn't exist on Handshake, then it just uses regular DNS. It goes back to the ICANN system. So you can still go to Bitcoin.com using a handshake resolver. And then finally, how do we tie together DNS and SSL? So I said that Handshake is a decentralized root zone and certificate authority protected by proof of work. And the trick to combine those two technologies is something called DANE, DNS-based authentication of named entities. This is not a new technology. It's not something that was invented for Handshake or by any cryptocurrency people at all. It's actually been around for many years, but it's been avoided because it's sort of unnecessary and it adds some latency, and the trust structure that we already use is good enough for people who don't care about decentralization. Long story short, what we do here is if you have an SSL certificate, you can generate them on your own. You don't need anybody to give you a certificate. It's just a public key, and we probably all know what a public key is. So you take the certificate and you hash it. Joseph provided a great explanation of what a hash is. And so that hash is a very small string. Here, the hash for this certificate on my example is this line here. And that is short enough to put into the DNS system. So now when you go to proof of concept, your resolver will find this hash, make sure that the certificate provided by the web server matches the hash in the DNS entry, which is secured by proof of work, and that's how it's done. So when you go to https:// proof of concept, the handshake resolver will go get that DNS record, so it knows what IP address the website is at. And when it contacts the website, it'll get this SSL certificate. It'll check to make sure that the certificate is the one that is committed to in the DNS records, also secured by proof of work. If everything matches, you get a green lock icon, you can now communicate securely with that website, just like you would if you went to google.com in a regular browser. So a little bit of talk about the Handshake chain. How do you get a name on Handshake? Or I'm sorry, my slides are a little out of order. How do we resolve a name on Handshake? That's a little bit maybe more fun. So, kind of like Bitcoin, like the design, the architecture is designed so that everybody can have their own full node. So I run a full node on my computer. I run one in the cloud. I also run one on a Raspberry Pi that just sits next to my home router. So all the devices on my Wi-Fi network at home can resolve HNS names. I set the DNS settings in your phone. I can show you how to do that. And so Handshake, the full node, the thing that actually verifies the blockchain, does the DNS resolution for you. It has this extra function built in. And there are also other bits of software that don't need to need to verify the entire blockchain. They don't need to do money stuff. They don't need to do cryptocurrency stuff. They can just verify the DNS data on the blockchain. That kind of software is much easier to run and much easier to integrate into lower powered devices like phones, or like to cram into a web browser, which is would be the ideal Handshake tool. You can use an SPV node. So like I said, you don't need to download the entire blockchain. You can also trust somebody else's full node. So one example of that is NextDNS. This is a service that it's kind of like a VPN, but they just do DNS. And what their business model is you use them to resolve all the DNS on your computer, and they just block certain DNS requests that they already know are malicious. So if some website you're on tries to download an image from a hacker, encryptallyourdata.com, NextDNS will just not give you the IP address for that server, and so your computer remains safe. So that's kind of their business offering. And they have a Handshake option. So you can use NextDNS for free. They also have a subscription model. And if you find this little button in your settings and turn it on, you can go to all these Handshake names automatically just by typing it into your browser. No extra software needs to be installed. Another way to do it is more deep in your settings. This is how the DNS settings look on my Apple laptop. I have a Handshake full node running at this IP address, and I simply tell my laptop to do all its DNS queries to that server, and it's a full node. And actually, I have it firewalled, so not everybody can use it. I can give people access if they like, but just want to get the idea across that wherever you can install a Handshake full node, you can use that as your DNS resolver for multiple devices and access these Handshake names, which I'll show you in a second. So how are the names distributed? Where do you get them? Names come from auctions that happen on chain. It's not an Ethereum style auction. It's a Bitcoin style auction. Every step of the way takes a different transaction, and they're all UTXO based. They're all chained together. It's sort of interesting. I'll talk about that in a second. There's also some reserved names like com, info, org, also Facebook, Google. These names are reserved for the people who own them now. And that makes a lot of sense. We wouldn't want to start a DNS blockchain and have people put a website on Google or something, and if they're not Google. So the founders designed this mechanism where using that ICANN key, using that chain of DNS security, those chain of signatures that we're trying to move away from, you can still use those signatures to claim your reserved name. So it's kind of interesting. If you own one of the names on the reserved name list, you can put a text record basically with your wallet address and the DNS in the domain name system, and use it kind of a proof to get that name on chain without having to go through an auction. Very cool. Coins were also distributed. There was this massive airdrop. If you had more than 15 followers on GitHub in, I think it's February, I wrote down 2018, you can use this tool called HS Airdrop to basically generate 4,000 HNS to your wallet address instantly. The founders of the protocol deeply believed in open source software and developer contributions and stuff like that. And so actually a huge portion of the overall potential maximum coin supply is going to this airdrop. Okay, so let's talk about the auctions a little bit, and then hopefully I can do a demonstration and everything will work. We'll see. This is a little bit of a complicated diagram. I've even simplified it a little bit, but these are sort of the terms you might see if you are bidding on a Handshake name. Names go through these steps, and each step has a certain amount of time that phase is sort of locked into. So you open an auction by setting a transaction. I want to open an auction for BlockDeFi. That's a top-level domain that I want to own on Handshake. A few minutes later, the bidding starts, and anybody on the network can see that name auction is open and that bidding has begun. Bidding lasts for 5 days, and bidding is blinded. So you actually send a little bit more handshake tokens than your actual bid, and that difference sort of blinds it. So if I only want to bid one HNS on BlockDeFi, I can actually send a transaction for 1,000 HNS, and nobody knows what my actual bid is. And that blindness is part of the game, part of the process to discover the market value of an asset. So those blinds need to be revealed after bidding is closed. After 5 days, you have 10 days to reveal. You must reveal or you lose your money. Again, it's part of the game. And then the winner of the auction pays the second highest bid. So if I bid 100 on a name and Joseph bid 50, I won the auction because I have the highest bid, but I only pay 50. I pay the second highest price. And again, this is part of a mechanism called the Vickery auction, which is designed to find the fair market value of an asset. Once you've won a name in an auction, you go through the stuff on the right of the slide here. Register, update. You can transfer the name. Register, update. These are how you add DNS data to your name, put it on the blockchain. Transfer, finalize. You can send a name to any address, any handshake address, and renew is something you have to do every 2 years. So you get a name. I'm going to show you 2 ways and then do a demonstration. One way is to use namebase.io. They are the first handshake exchange that has this type of registration function. This type of auction function. They were very helpful developing Handshake all through testnet. Great staff over there, very helpful Handshake experts. So I know they operate in the United States. I'm not sure what other countries they operate in, but there are plenty of other exchanges around the world where you can now buy and sell Handshake tokens. But Namebase is the only one I know of currently where you can actually participate in these auctions and bid on names. So here's a screenshot of namebase.io, what the auction looks like for the top level domain medical. And you can kind of see how the bids are there, and they list the lockups, which is that like extra little amount of money that, I can't, if somebody bids 888 handshake, I don't actually know that that's the value of their bid. I know their bid is below that, but that's like the blinded level. And then in the reveal phase, we find out what their actual bid was. I'm going to demonstrate in a second how to use Bob Wallet. They actually have an easier website now just called bobwallet.io. And I'll demonstrate this. It's an Electron app that wraps a full node. You can think of it kind of like Bitcoin Core, but for Handshake. It does all the money stuff that you would expect. Your 24-word seed generates addresses. You can send and receive money. But Bob Wallet also does the auction participation and the DNS registration stuff. So before I get into the demonstration, I do want to talk about 2 other little projects that you can use. So the idea of, you get a name on Handshake. A lot of people are speculating on names. They buy a name now, they want to sell it later, or they want to sell subdomains for their name, that kind of thing. For those of you who are excited about actually building a decentralized website and owning a name that nobody can take from you, so that there's no root of trust above you, it's just a blockchain and you and your private key and you own that name. I've written a piece of software called Handout, which is open source and it's on GitHub. And what this program will do, and I'll demonstrate it for you hopefully in a second, is it spins up a web server to serve your website. It also runs a name server, which is a type of DNS server that provides DNS records. Not all the DNS records come directly from the blockchain. You can think of it as a layer 2 or an application. We don't really need to go into it, but you need it if you want to have a decentralized website on Handshake. And the other thing this script will do is generate all your keys. It'll generate an SSL certificate. It'll set up the DNSSEC. It'll set up the DANE. Everything's good to go. And then people can securely browse to your website. For people who want to securely browse to your website, you need one extra little piece of software. So as I've explained, Handshake does 2 things. It does DNS and it does a certificate authority. And getting the DNS part figured out is actually kind of easy. You can use NextDNS, or you can use a Handshake resolver like I've described, or a full node, and you can type in a Handshake name and your browser just goes there. Your browser doesn't even know that you're going to a Handshake domain. It doesn't even matter. But the security is a little tougher because browsers are not configured for DANE. Browsers expect that your SSL certificate will be signed by some root of trust. And if you're savvy, you can add your own root of trust to your computer. So what GoDane does, there's a diagram here in the middle, which I wanted to highlight. What GoDane does is it generates a certificate just for you, and it installs it in your browser. You can install it in the operating system or just in Firefox, which is kind of a clever mechanism. And then GoDane will check those DANE records. It will contact the Handshake, a DNS resolver that you specify, and get that TLSA record and make sure that the SSL certificate coming from the web server matches the record. And if that's all good, if the security is valid, then GoDane, with its own certificate, will sign the certificate of the website the same way. So it's like it's a little local authority figure. It's a certificate authority that you control, that you install on your computer, and you tell your operating system to trust it. And it goes between the web server on the internet and the browser, and signs these certificates on the fly. It's very clever. I'll demonstrate it, how it works in a second. Obviously, this isn't ideal. This isn't something the average internet user is going to want to do. This is the state of the art right now, and I'd like to see technology like this integrated into individual web browsers, operating systems. Who knows? Maybe Handshake gets so popular, we see a Linux distribution, in a few weeks, months, whatever, years, where this stuff is built in. Okay, so I have my Firefox configured to both resolve Handshake names using a DNS over HTTPS server down here. So this is my Handshake resolver. And then the Godane proxy is also running on my computer on port 8080. So this is very simple to set up. You can see I just needed to fill in a couple fields. And then that certificate that Godane generated is also installed in Firefox. And if you're interested, you can learn about how to do that. So this is a site that I run. It's called Proof of Concept. You'll notice in the URL, there's no dots. It's just https:// proof of concept. This is unusual. It's a website that lives right on the top level domain. And this is a name that I won in an auction on Handshake, and I control it with my private keys, and nobody can take it away from me as long as I still control my private keys. It runs on Handout, that server software that I showed you a second ago. So it has a name server and the web server built in. And I've coded it to so that, if you want a subdomain, you could pick any subdomain, and lots of people have added their subdomains. Alan has signed up, Spring Cleaning has signed up, and these people have subdomains. So now we're here at michaeldeguzman.proofofconcept, and you can see this user's URL here, and they get to update their status. So, it's a proof of concept. It's kind of like Twitter. All the users get their own subdomains, and then they can post these messages, and you can kind of see them all in the history. But what's particularly interesting about proof of concept is that this is a secure website. And the reason I wanted to design it like this is because, you should not be typing any type of password or any type of username, password, no credentials at all should go into any web browser that is not secure, that has that lock icon. Otherwise, your password is going over the internet unencrypted. Everyone in the world has got your password. And similarly, you should not trust data you see on a website that doesn't have SSL. If someone says, here, my name is Joseph Peculiar, here's my Bitcoin address. If it's not secured by SSL, you can't trust that. Any other server along the way could have replaced Joseph's Bitcoin address with the attacker Bitcoin address. You can't trust it. But using this Godane system, this web browser is secure. This website is secure. You can see it says verified by a DNSSEC. So this is very different than the screenshot I showed you where Bitcoin.com is secured by Cloudflare, which is secured by Baltimore Cyber Trust or whatever it was. This is proof of concept. It's secured by the blockchain. Isn't that amazing? I have a couple other Handshake sites. It's just kind of interesting to see http://2D. So 2D, just a 2-character name. This is just for fun. And Will Croteau has this other site. You can see the URL is just http Will Croteau. And I'm not sure what the deal is, but I love this website because it's psychedelic, and these cows and little Donald Trump faces fly around, and it's just very silly. But also it's worth noting that this lock icon is slashed here, and that's the browser telling you don't trust any information on this site and don't type any sensitive information into this site, because these two users did not set up Dane. But in proof of concept, you can see there's a lock there and it's secure. All right, so we've got a little bit of time left, and hopefully I can show you sort of what the interface is. So what I've got here is Bob Wallet. This is our GUI. Like I said, it's kind of like Bitcoin Core. It runs a full node, and you can do all of your money stuff with it, as well as the name auction and bidding and DNS stuff. So this is only on Reg Test, which means that this is a local test network that is only running on my computer. I'm not connected to the world. None of the money is real. It's just a test network. But there is mining. So, for example, I have another full node running in the background, and I can generate a block. And we'll see on the right side that that block, gets added, and now we're up to height 210 in Bob. Okay, so let's look for a name, and hopefully I don't embarrass myself with this presentation, and we'll see. So I want the name BlockDeFi. I want that to be my top-level domain, and next year we can do the conference at https BlockDeFi, no dots. So the first thing we do is we start an auction. Now this requires a transaction. So I type in my password, it's signed with my private key, and you can see in the logs here, a transaction went out, just as if you were sending money. In this case, what I'm doing is sending a message to the network that says, hey, BlockDeFi is a name that I want, or that somebody might want, and the auction is starting. So now what I'm going to do is sneak back to my console and generate some blocks. And that's because when you open an auction, it actually takes some time before the bidding starts. So now we're 7 blocks into the future, and now we can place a bid. So Bob is telling me that we're in the bidding period now, and we can place a bid on this auction. So let's do that. I'm going to bid 1 HNS, and there's this add disguise option, and I'm going to disguise it with 10 HNS. So what this means is that on the blockchain, it's public, everybody is going to be able to see this transaction for 10 HNS. But is that really what I'm bidding on BlockDeFi? No, it's not. That's a blind. So nobody really knows what anybody else's bid is, although they might be able to guess. So the total amount of money I'm going to send is 11. I guess I could have done this a little differently, but that's what's going to happen. So here we go. Password goes in. Transaction goes out on the network. Now there's a transaction for 11 HNS out on the network. It's really a secret bid for 1 handshake. I'm going to generate 1 more block and kind of just toggle back and forth to reset the UI here. I'm going to place another bid just for fun. This time I'm going to bid 2 handshake with no disguise. Why not? No disguise this time, just to show you that it's optional. Okay. Generate 7 blocks, I think. And where are we now? So you can see the wallet shows me that I've sent 11 HNS in 1 transaction, 2 HNS in another transaction. We can go look at the BlockDeFi screen, and you see that the bids are down here. Now, if somebody else who is not me bid on this auction, you would see their bid down here as well, but you would not know what the bid value is. There'd basically be a question mark. We know what the mask is. They're blind, but we don't know what they actually bid. So now we are in the reveal period. And like I said, you have to reveal your bids because they're blinded. And part of the rules is that the network needs to know what your real bid was so that a winner can be determined. No options are necessary here. You just click the button. This is another transaction that goes out on the network. This transaction will actually reveal both of my bids for this auction. And we can generate a few more blocks to kind of skip ahead in time. Again, the reveal period on Handshake Mainnet takes 10 days. So everybody has plenty of time to reveal their bids. So in Bob Wallet, we can see my bids. One of my bids won and the other one lost, obviously. The losing bid for 1 HNS, I can redeem. This is another transaction type that takes the money out of the auction back into the wallet, so I can now spend that again. And then the winning bid has the opportunity to add DNS records. So now we can register this name, and this is a DNS type interface. You'll recognize it from GoDaddy or from Namebase even. And let's just say this is an awesome conference. This is a text record. It's a type of record that's allowed in DNS on blockchain. And we'll submit this like another transaction. So I now own the name BlockDeFi, and I'm updating the DNS records for it, all on the blockchain, all decentralized. Again, I'll move the chain forward a little bit, and hopefully this is all working. All right, so here comes the real test. Now what I'm going to do is... Yes. BlockDeFi txt. Fantastic. Okay, so the command I just typed is dig, which is a command that looks up DNS records. I've added some parameters to tell it to look at my regtest node, so it's not actually doing a DNS lookup the way you would if you were browsing the web. It's asking like my little test network. And so I asked it for the name BlockDeFi, for the text record for the name BlockDeFi, and here it is, clear as day. This is an awesome conference. It's right there. So if I had a website up at https://blockdefi, I could have added, whoops, I don't want to renew just yet. I want to manage. You can add another record, and these other record types like DS, NS, glue, and synth, these are more advanced record types, but this is how you add the IP address of your website on blockchain. Really quickly, I will show you how Handout works. Let me switch to the right place. So if you were going to install Handout to launch a secure website on your Handshake top-level domain BlockDeFi, you run it in Node.js, and my website or my TLD is BlockDeFi, and let's say that my IP address is 10.20.30.40. Why not? So this script will generate an SSL key for me and a self-signed certificate. It'll generate the DNS set keys. These are the keys that go into the DNS records, and there, we're all done. So what you could do is you take like this DS record here, and that is telling the blockchain what your public key is. And then that key is actually used to sign everything else in your DNS zone. So I kind of wave my hand at that a little bit, but we all, being cryptocurrency users, understand like public keys, private keys, signatures, messages, stuff like that. This is the DNS version of that. I give you my public key. I sign some stuff that says, hey, my IP address is 10.20.30.40. And then when your computer goes to https://blockdefi, they get the website from the right IP address. They can verify that all the signatures are correct, all that kind of stuff. So I should be able to now look up the DS record from BlockDeFi, and there it is. Okay, so this is something the browser would do in the background to check all the signatures. And actually, let me see if I can do DNSSEC here. Okay, yeah. So I added a DNSSEC flag, and this RR-SIG, it's a signature that's available in the DNS system. Just wanted to illustrate that is a thing. So I know I rushed through everything, but I hope that was cool and maybe inspires some of you to learn more about Handshake. I pasted all those links in there. I live on Telegram and on IRC, and you can find me there. So I'm going to look in the chat for some questions now and see what people are asking. How does this interact with Microsoft Word keychain or certificate in a computer, and where can it be located? Okay, so I'm most familiar with OS X, with the Mac operating system, and in your, if you go to utilities, there's this program called Keychain Access, and here you can see, all the keys that are trusted on my system. And this, if you do the GoDane route, your key could go in here. I think I might be able to show you if I have my DNSSEC key. This would be installing it on the system level. Okay, there's my DNSSEC key, and this is from an earlier test, but you here and you tell the computer you want to trust it. I'm not going to do that now. But also, if you're using GoDane, the instructions on the GoDane GitHub will illustrate how to just install the certificate just in Firefox. Firefox is awesome when it comes to security options, in the sense that you can make it insecure by putting your own certificate in there, but that's something that really makes Handshake work. There's a question about unstoppable domains. That's totally valid question. Ethereum naming system, or ENS, is also another cryptocurrency block, naming system. There's a lot of differences. First of all, Handshake names are top-level domains. It is a root zone. Unstoppable domains names go into .crypto or .zil. ENS names go into .eth. So one of the big differences is that Handshake is a root zone, not a subdomain. And there's other little differences. Handshake is not Ethereum. It's its own blockchain. It was designed from the ground up with special data structures and certain types of proofs to work quickly on low-powered hardware just for DNS. There's no CryptoKitties on Handshake. There's no anything. There's no smart contracts. It's just DNS. And so being very single-purpose like that gives it a huge advantage to be optimized. The trade-off is, we don't have the security that Ethereum does. If you do something on Ethereum, you have that level of security that you can expect from anything on Ethereum. The problem is that there's a lot more data to verify, and all that stuff is a lot slower. Handshake is really designed for, the freedom, the crypto anarchist idea that you can run a piece of software on your computer that verifies everything and does it quickly. Can you share a link to have access to your slides? I think I've done that. Let me see. Are there any more questions? Okay, thanks. If there's any more questions, you can ask them now. Otherwise, I think we're pretty much out of time. And thank you so much for having me and giving me the opportunity to talk about Handshake. Imagine IPFS. Yeah, actually, so I've been working with some engineers at Saya, which is another decentralized file storage system that also has its own blockchain, but otherwise works like IPFS in that there's a distributed system where you can store data. And they recently had a hackathon where a lot of really interesting projects came out of that. And they have these portals that anybody can run where you can attach a Skynet link. Skynet is what they call their distributed file system. You can attach a Skynet link to a Handshake name. And so you can go to http:// proof of concept, and the server will proxy the Saya link and actually give you the data from the decentralized storage. And you can imagine this happening with IPFS just as well. Like Joseph talked about the content locators that IPFS provides. You can put one of those content locators in a text record, in a DNS resource on the Handshake chain thing would work the same way, just so long as the people looking for your site have the software to decode it. All right, if there's no more questions, then I just want to thank you all again. And the links are there and the slides are posted. And I hope everybody has a great rest of their day or evening. Thank you.
Awesome presentation.